How's it going, everyone? Welcome to class 16 of 20. We are finishing 4 out of 5 weeks. We're in the home stretch now, and I'm going to be leading us off. I'm going to be handing it off to Mike after a couple of slides here, a couple of plays, and today we are talking about some more trade setups. So you've got a whole lot of stock charts you're going to get to look at. We're going to be going through some more plays. We're going to be organizing this one just by play type. I'm going to be going through some actual trades that I executed, a lot of intraday setups that I love and I have seen repeat themselves over and over and over again this year and has made me a lot of money. And remember, these are not so you can copy and paste them, but so that you can take them, maybe take some pieces for yourself, learn what makes a trade setup, how patterns can repeat themselves, and maybe get a feel for why, we pick these trade patterns and we trade some of these patterns. And then Mike's going to step in. He's going to show you some very interesting index trade setups, trading the SPY, looking at VIX, TRIN, advanced decline, all of this crazy stuff, using market generals, relationship trading. He's going to be talking about a lot of very interesting, unique trade setups and trade strategies right after me. But first off, I'm going to be kicking us off, and I'm going to be talking and closing us out on our habit of the week, which is patience. Time is your friend, impulse is your enemy. Look, we have talked about patience all week. If hopefully you've been watching these classes every day, and if so, then obviously this is the fourth time you've heard about this. But you need to be patient with us because we need to emphasize this habit, because this is going to make or break you in the long run. This is a marathon, not a sprint. And just think about it. The strongest force in the universe is compound interest. Yes, you could make $1,000 immediately, or you can compound and slowly compound and compound, and that force will get so large and so unstoppable that you would become unbelievably rich, unbelievably successful, unbelievably smart, whatever you're compounding here. And in this case, what we're compounding is habits and education and knowledge and recognizable patterns. And so the more you're kind of hammering at that and expanding upon your knowledge and growing it, it will exponentially grow, and you'll slowly start to understand more topics because you'll have a strong foundation. I've heard Mike say this quote before, and I don't know if he got it from somewhere or what, but I liked it, so I put it in here. He's probably said it on here already, but we overestimate what we can do in a day, and we underestimate what we can do in a year. I think that is very true. It is dramatically true to an extent, and people don't realize just how much you can accomplish from the beginning of the year to the end of the year if you dedicate yourself throughout that year. You're patient, you go through the motions, the habits, you do everything you need to do. And look, we're not going to beat you over the head over this anymore. I'm not going to spend 20 minutes on patience. I'll have this one last slide on patience and trading. And, because look, the last thing I'll say is this class is a good example of the patience needed. This is a 20 course period, 20 classes. Each class is 1 to 2 plus hours each. So that's, 20 to 40 hours, and this is only scratching the bare surface of the market. This is the beginner trading lesson plan here, and this is so there's so much more out there, and we've only just covered it in 40 hours. So why do you think you're going to be able to just take this, cram it into your brain, and suddenly hit the market running? No, we're building foundations, we're building good habits, because out of this foundation and out of these habits and out of doing the right things, that's what's going to help you kind of grow and expand and really protect yourself in the time it takes to learn and adapt to the markets. You're essentially in school right now in trading. You're never not learning in the markets. And right now you're kind of paying your market tuition and you're learning. And, this probably won't take 4 years like a regular school. Think of, when you went to college or high school or whatever, it took 4 years. And were you a master of whatever you were learning in school by the time you got out? No. In this case, I'm telling you it's going to take less than 4 years for 99.9% of you. If you put in the hours and put in the work and put in the habits, it's going to take less than that time, and you'll have a nice paycheck waiting for you at the end of this education, at the end of this school system. So, just be patient with yourself, be patient with the trading. Patience with yourself is definitely important. You can't lose patience with yourself. Yes, we're all going to stumble. We're going to have moments of stupidity, let's be honest. We all do, and we constantly do. We're always always battling with ourselves. We are our worst enemies at times, and you got to be patient. You got to let yourself out, let yourself off the hook at times without letting yourself get sloppy. So enough about patience. Let's just dive on in, and I'm going to start talking about my trades. And remember, these aren't like A plus crazy setups that you'd be like, how the hell do you think about some of this stuff? That's because trading really isn't that hard. From a larger perspective, these setups and these patterns, it's not hard to rationalize why they're successful and why they work. And so you're going to have a pretty decent understanding of why this was interesting to me and why I trade these, at least this year. End of day squeezes. This is the first one I'm going to be talking about. I've talked about this before. I talk about these kind of setups all the time on our 1 p.m. shows from Monday through Friday. And, this is a pretty fun setup right now. And you can trade these in small price stocks, the penny stocks. You can trade them in the big stocks. And, so long as that stock is in play, you can get some real opportunity here. So first of all, what kind of categorizes a end of day squeeze candidate for me? Well, first of all, like I said, the stock has to be in play. I need volume in there. I need some people, interested in this stock. I don't want some stock that's been stagnant for months, obviously, because it's probably not going to squeeze. And if it does, it's probably not going to be a sustained squeeze. And one way to identify that is going to be with a high RVOL. RVOL means relative volume. That means I need more volume pumping into today compared to other days in the past. And sometimes I've found trades and end of day squeezes that worked perfectly that didn't have tremendous volume. So, this is just one of those checks in my checklist. And the more checks I can get in my favor, the better. What I like to see is it did a nice large move earlier in the day. Maybe we kind of had this nice run in the morning, and then you kind of gradually level out and have some nice consolidation. I don't want to see this stock rocket up and then drop all the way back down. That momentum can't die. I need that thing to hold on and consolidate after, at least a solid run in the morning. I need to see that those bulls were solidly in control and then, are still at least partially in control and are keeping this stock under wraps. And then what happens is it's going to start curling back up towards the end of the day, and it's going to break that intraday resistance that it set into the close. Or maybe this thing has just kind of maintained strength and it's just kind of been grinding higher all day, and then suddenly it just kind of starts to accelerate at the end of the day, and you see that squeeze higher. It's going to be better if it's breaking a level on the daily as well. And when I show you some of these charts, you're going to probably be able to identify these pretty quickly. It's pretty obvious to see these end of day squeezes a lot of times. So when we're talking about this, when I'm trading it, what I'm doing is, you can catch a serious second move into the end of the day, because sometimes you're getting a lot of shorts that get squeezed out, especially if that stock had set some intraday resistance that it's been bumping around throughout the middle of the day. If it starts breaking through there, you're going to see shorts start to squeeze out. You're going to see late arrivers who maybe missed the first move, missed that opening drive, and they see it running again, and they're like, I need some profits. I can't sit out the second time. So you always have those late arrivers who can hopefully pump in too, which is why you want to see that volume increase into the end of the day. And I'll be sure to point that out as we're talking about this. And sometimes these end of day squeezes can lead into a gap. And I'm telling you, these gap ups, these can be a little more inconsistent, but many times these stocks that are running at the end of the day and finishing strong can have actually some pretty good gap potential going into tomorrow. And so usually what'll happen is that stock will close and you'll still see volume trading, and you'll usually start to get that gap up, that drive higher in the after hours almost immediately. And usually, if it's a good gap candidate, it should be, and you should be able to identify that if it's doing good volume, you'll have some volume in the after hours, at least initially, where if you want to take profits, if it starts to run in the after hours, you should have some liquidity in there to be able to exit. A lot of times when you have this gap, if this gap actually happens and we squeeze higher into the next morning, a lot of times that morning will then result in another opening day squeeze. It might not be to the extent of the prior days. Sometimes it doesn't squeeze. Sometimes that's just kind of the end of the momentum. It's kind of like one of those blowout those kind of blowout gaps that we talked about yesterday. But, sometimes you can really get a little extra juice in there, and so you can get some good momentum in these. Now, like I said, the gap this is a gap. This is a gap play we're talking about. Obviously, there's extra overnight risk. So, you need to have caution. You should probably, if you're trying to take the gap portion of this, which you do not need to take the gap portion, the end of day squeeze can be a great trader in itself. But you need to be watching it at least for as much of the after hours as you can, because you can't really set stop prices. You don't want to set stops in the after hours. So you want to make sure you're monitoring it. Many times, if I'm in a gap candidate and I have some size and I have some positions, if it starts squeezing in the after hours and I'm up a point, 2 points, whatever, I'll just start taking some out in the after hours. That after hour squeeze is sometimes nice. I get a little bit extra stuff. Now, what can also help a candidate for possibly turning into a gap is if it's been moving because of a news catalyst, or maybe it's a hot sector, because then you have kind of that sustained interest in the stock. It's not just a runner of the day for no reason. That news catalyst, or that, the fact that it's part of a hot sector that's all moving, then you'll usually get more late arrivers into the next day, and it'll more likely sustain. So let's start looking at some charts here. The first one I'm going to show you is KCAC. This is a SPAC blank check company. That means that this company IPO'd at $10 a share, hangs out at $10 a share, finds a private company to merge with, and then they take that company, they merge with them, and they go public under a new ticker. And that's kind of how this company that they're merging with IPOs. It's very odd, but it's blown up. SPACs have blown up this year, and you see them all over the place. This was one of those SPACs, and this is the day I'm talking about here. This is the day that we got the squeeze. So I just wanted to show you this breakout. So technically, this is a news catalyst. It comes out, hey, we're buying someone. And guess what? This is another one of those electric vehicle mergers, and the electric vehicle market has been going through a hot streak this year, which is partially why we saw a lot of volume pump in here. It's a new electric vehicle SPAC. Great. Everyone pile in. Let's get some momentum. So we see a lot of volume happening. Well, let's see what it did during the day. Didn't really have a huge gap. Didn't really have a huge move, rather. It had a big gap, which is nice, and I see this nice momentum. It didn't really drop off, but it held VWAP pretty nicely. You've got this clear resistance sitting at 1750. So at this point, it's what is this, 230? Oh no, this is 330. It's 330. I'm sitting here, maybe I saw it around here, and I'm like, all right, I'll set some alerts for the pre-market or this daily resistance. And if we manage to get over here, anyone who's been shorting against the 1750 or, is going to get squeezed out. People who missed this gap and didn't get to capture any profits are going to see this start breaking out and are going to want it. And guess what? This one broke out at the end of the day. And this is an actual trade that I took, and I'm going to show you exactly what it did. Bam, look at this. In the last, I want to say like 10, 15 minutes of the day, this one finally decided to go. And look at the volume surge. That is a good sign. Nice, healthy, steady volume in here. It's not exponential, but it's a nice, healthy grind and push up in volume, more than we've seen since the morning. We break these highs. I buy on this red bar here after we kind of pull back and retest, and I start seeing us move higher. I buy a little bit here. And my stop is simple. If we start moving below this candle, if we start failing this resistance again and moving back down, I'm out. That's fine. The end of the day squeeze probably isn't working. Or you could set a stop at VWAP. It's really up to you depending on how you want to trade this. Starts pushing up nicely. I take profits with some momentum in here. I try to hold as best I can into the close, get a little pullback, and as we start moving up, you can buy some more as we go through the whole number, and you get a squeeze. If you had bought on the first break here, around this time, that's a 1.5. Oh, I went a little too far. That's a nice 1.5 here, and you managed to capture that in the last 10 minutes. The last 10 minutes of the day, that's more than this stock really moved all day. And guess what? This news catalyst that sent us up with all this volume that, finally had this end of day momentum, it was a gap candidate. And it gapped up. It did. It closed at like 19 bucks, opened up the next day at 24. That's 5 points overnight. And at this point, like I said, you see that momentum happen as soon as it closes pretty much. It looks like it does a little wiggle here. And within the next 10 minutes, 15, 20 minutes of the close, you're already up 2 points. You can just get out there. That's an extra 2 points you got. And you didn't really have to do anything except wait for this to break. It's not that hard. This is just the first example here. And look, it looks like it might have dropped a little. I can't actually, no, that's right before the open. So right here is where we open this first green bar. You got another couple points here of a squeeze on the open. So this is a great example of our first gap candidate. Next one, Neo. And this day is the day that it broke out. So I'm trying to show us the day that it happens as well in these dailies. But the setup was, a nice little flag here on the daily, good momentum. Neo is an electric car vehicle. It's kind of one of the leaders that kind of started leading this charge of electric vehicle mania that we've been experiencing. Good volume on this day, so it had a high RVOL, and it might have even had a news catalyst. So let's go to the intraday and see what it did. Real strong move. This thing went from 15 bucks up to 17 throughout the day. Did a little bit of a chop here, did some sideways consolidation. We didn't lose our momentum by any means. We didn't come below VWAP. We didn't drop down into here. The bears never really, we had a slight pullback, but it never really violated any major levels, any major lows. And at the end of the day, we start to see us grind up. Now, this one may not be as cut and dry for some. You could have used this little level here. I'm pretty sure this is where I started buying, only because what I like seeing sometimes is the last hour of the day. I like to call that the power hour for some of these, because that's when I'm typically going to start looking a little closely and trying to watch for some of these, just because that's usually when people start getting impatient and you start to see the volume pump back in. And in that power hour, we finally saw it break. I buy a little starter piece, and I buy some more going into the close, because at this point, we are closing at the highs. Unbelievable volume, crazy good momentum all day. Could this have gapped down tomorrow? Absolutely. Could this have had a bad headline that, ruined it and sent us down here? Absolutely. So you need to keep that in mind, that there is overnight risk. But look at this daily. Beautiful breakout here, and look what it did the next day. Closed at 18. Opened at 19, got an extra point overnight, was never really in trouble here. Actually, I'm pretty sure I took this off kind of in the after hours here, because I was like, look, I got another 50 cents, 60 cents. I was happy with that, and I'm perfectly fine with that. I'd have to check my exits. Even if I held, you got an extra squeeze in the morning. Look at this quick pop here, right on the open. And if you're holding this into the open, well, what's your stop? Well, if it starts dropping through these pre-market lows, if you even start seeing it ticking down, just get out. Why not? Find a good level in the pre-market that is established, and use that if you want. Regardless, you had a nice end of day momentum, great pre-market push, a little bit of a dip here, but this is 5 a.m., 6 a.m. There's no volume in here, so you don't have to worry too much about that. Once the volume starts stepping back in here, we see it start to step back up, and we're on our way. Let's take a look at another one, HYLN, and I believe this one was SHLL when it was a SPAC. This is another one of those blank check companies, another electric car vehicle merger acquisition, I'm pretty sure. It was going under SHLL, and then now it's HYLN now that it's complete, but this is the day. Look at this breakout day. Pretty decent volume. It's not exponential. It's not great, but it's higher than we've seen. A little bit higher. Nice breakout day that we had out of a nice kind of flag here through this 40. So looking pretty good. And here's what it looks like. Now, I'm going to guess that this was a headline. Regardless, that news catalyst is fine, because what happens is you see this thing kind of consolidating. A news catalyst comes in, gives us that end of day squeeze. Even if you didn't play this part, even if you're like, oh, this is a breaking news play, I don't quite like it. Look at how strong we closed. We closed really strong with really good volume. We broke through a pretty decent range and level on the daily here, so it's a pretty nice breakout. Really clean momentum. This is kind of a gap candidate. It's an end of day gap candidate, so only people who are watching this in the last hour pretty much of the day have taken this at all. And so guess what it did? Wham, gapped up. And you pretty much had that gap up almost immediately. Looks like it spent maybe 10 minutes hanging out, and then suddenly, bam, you're up 6 points. You're up 6 points after the close, maybe 5 or 6 points after the close. You can take profits in there, you can take profits in here, or you just wait for the gap up, and it looks like it opened at 52. You got from like 48 or 49 bucks to 52, just because those late arrivers, those people who panicked and got in and had FOMO or chased this thing higher, or people who covered their shorts, whatever it is, they kept pushing that thing higher, and you got a nice gap candidate. If you didn't want to play the breaking news play, because look, technically this wasn't an in-play stock prior to the news headline, that's fine. You still had a good gap candidate on this one. Let's look at another one. This is another electric car vehicle SPAC. This is DPHC. It eventually merged and became RIDE, and this is the breakout day. Are this stock's already in a breakout? It is. It's already broken out. This is the day we're talking about here. Let's look at what it did during the day. Okay, not the best. this isn't the best I've ever seen. It's a trade I took. I'm going to tell you that now. Had a decent pop here in the morning, decent volume. I can't be upset about the volume. If you look at the daily, you can tell, that it was doing a lot of volume, most volume since the first 2 days here. So that's a benefit. Probably, had a good R vol. You saw that strength in the morning. I don't like that it dropped below VWAP. Didn't drop the opening print, so we never went red technically, but the Bears put up a little bit of a fight here. But the end of the day, we got back up to the highs. So I actually bought on this VWAP retest. I bought as soon as I saw it bounce and we started moving back up. I got like 24.15s, I think, so like in here. And then I bought some at the end of the day. I did not hold that much size on this one because this was a riskier trade in the sense that it wasn't as clean, it wasn't perfect. But sometimes you're not going to get the cleanest stuff, and then at that point it's up to you. Well, do I adjust my sizing? Do I have a different plan? What is my plan now? This one ended up gapping up, so it worked. It wasn't the cleanest one, so I didn't have much size, but I got 2 points on the open. And look, this is a good example. Wasn't the best one, didn't do a ton of volume in the pre-market, and this one actually dropped on the open. It still didn't quite reach my entries, which is fine, so I still made money on this one, but it still kind of kept going. It was a good little kind of momentum breakout. Let's look at another one, SRRK. Now, SRRK had already a monster move the day before. Monster breakout with a good catalyst, good volume, breaking out on the daily. So actually, this was on a second day play. Second day play, really strong stock. And I actually want to show you that you could have played this either day. This stock could have been played for the end of day scalp or the gap up either day here. You can tell the volumes breaking out. Momentum clearly was in control both of these days. Here's the first day, and this is the 5-minute. I apologize, but good strong move, held VWAP, pulled up, and we finished more or less at the highs here. You had a little bit of a wiggle in the after hours. Never really violated any lows, so depending on what your stop would be. Nice, sizable, decent push up and gap up in the after hours. Let's look at the next day. The next day is actually a little better in my opinion. Nice, strong, just healthy stair step action up, closed almost at the absolute highs. Volume is pumping all day. There was a little bit more of a fight in it, but it never really lost that momentum. And it grinded up, finished at the highs, and you got another point, 2 points, depending on when you took off in the after hours on the morning. It did drop. So, sometimes you don't get that squeeze, and that's why sometimes the gappers aren't as clean. But, another strong stock that 2 days in a row gave you a gap up because it closed at the highs with good volume, breaking daily levels with momentum on a news catalyst, and it gave you a good opportunity. Here's another one, ELSE, E-L-S-E, and this is a good example of an end-of-day squeezer. This one, had a little bit of volume, kind of pumped up, hang down around VWAP. Look at the volume at the end of the day. Look at this surge, forward at the end of the day. I was a little late to this one. I started buying it through 750, probably even into 8. And so, you start buying some and you can take some off with momentum, however you want to trade these. Really good momentum. You could have just bought and then sold by the close. That might have been what I did in this case. I'm not positive. But, maybe you would have saw this one and said, like, oh, I actually closed at the highs. This is a pretty good gapper candidate. This one gapped down. And it happens. It happens, If I took this one overnight, I don't remember if I did. I might have. And if I took anything overnight, I lost in that. Now, hopefully you're watching these in the after hours, so if I saw this drop, if I saw this start to get down here, maybe I'm exiting if I'm below some of these lows, or maybe if I break through these lows, and then you can save yourself a little bit of pain. But, it happens, and this is the risk that you run. But if you played this end-of-day squeeze, you still made money. Let's look at another one, EQ. This one, look at that volume. Holy shit, 100 million shares in a day. I don't even see the other volume bars anymore because they're blown out of the water. Blown out here. Huge move in this day. Huge move. And it spent a lot of the day kind of hanging out below VWAP, and then suddenly just volume came in. It started surging, and then you had a little breakout here at 2 o'clock. You had another breakout here at 3 o'clock. Power hour, baby. Here we go. Last 10 minutes of the day. Holy shit, it's time to start flying. And then you really get some volume surge. You get some speed and momentum. You can momentum trade these. You can, buy and sell at the end of the day. You can try to gap them overnight. You can do whatever you want here. It varies by me. It varies on how much I'm up. if I'm already up a lot, I'll take a lot of it off because, you want to lock in profits to some extent. Maybe I'll take some off and save some. Maybe it's momentum based. It's really kind of how I feel for the day, honestly. But monster move. This one went from 8 to 30, closed at the highs, gap down. It did. It gapped down. Now, if you played this momentum squeeze here, you made great money at the end of day squeeze. If you didn't and you only tried to gap it, you actually got a couple points at first in the morning, or right at the close. It went from 28 to 31, so it did go up 3 points. Gave you some time, but and if you're smart, you're watching in the after hours, you see it maybe break these lows here, you get out. It's no problem. You only lost a point or two. Or you just watch momentum, or you hold. It's really up to you there. Let's look at another one, CAAS. This is a good one. This one happened recently. I called this one out on our 1 p.m. podcast, and this is why I'm pulling this one up, because I feel good about it. Good volume surge, broke out on the daily, closed literally at the high of the day. So this is what it did during the day. This one actually kind of went down, hung out around VWAP, which I don't like, but what I did like is I had this clear resistance here, clear resistance, clear level at $7, broke it, huge volume surge. Nice fat volume surge. We break the resistance, do a nice little pullback, and we surge. And if you just trade, that end of day kind of breakout, you catch 3 points, 2 points whenever you decide to enter this thing. And then if you take it into the close for a gap up, you got another 5 points, 4 points. 3 points depending on if you bought it on the close or if you just played this little momentum drive here. So this one actually worked. You got a nice little gap up. Now let's take a look at a big boy stock, Myrna. Everyone should know what Myrna is if you've looked at the market recently. Look at this monster move it's taken. And I'm pulling this one up because, as you can tell, you probably had some overnight gap options here. Now, I am going to preface this. A stock like Myrna obviously has a whole lot of headline risk overnight. I wouldn't really recommend this if you're inexperienced. If you do take this, I would recommend small size because you never know if something comes out. You don't want to be caught with something stupid like that. But it had end of day squeezes. This day ended early. I want you to know this was a half day, which is why this suddenly dies. But you have nice end close at the highs here, decent volume, strong uptrend, we gap up. Pretty strong move, good volume, we gap up. Look at this one. This is my favorite. I'm pretty sure I called this one out too. Beautiful wedge here at $150. Pretty steady grind up. End of day, last like 10 minutes, we break through it and we close at the highs, and this one gapped up like 20, 30 points. So, really good examples there, and even a big stock like Myrna. It's an in-play stock. That was kind of the key there. Now let's talk about trading off of VWAP. This is something I love doing. I trade VWAP all the time. It is the volume weighted average price. Who doesn't know that? If you don't know what VWAP is, we talk about it in some of our earlier classes where we talk about technical indicators. And now let's talk about, because it is a great point of control reference. I like making trades off of it because it can be some really good support and resistance intraday. It's a key level, an indicator that a lot of people use, and so you can see a lot of respect on VWAP in the market, in stocks, and so you can play some plays through it, reclaiming VWAP, tests, retests, wedges, fake breakouts, use it as support. You can use VWAP as trailing stops. There's a lot of ways you can use VWAP, and really any moving average in general. And usually, if I'm trading off of VWAP in intraday, it's usually momentum based for me, but it could be the beginning of a larger move. So when I'm trading off of VWAP, I want to warn you, beware the flat VWAP. If a VWAP is just completely flat and dead, that's probably because the stock is very flat and dead. And even if it's moving away, it's not doing much volume. Otherwise, the VWAP would be moving because it weights in the volume to that VWAP. So that's something that you need to keep an eye on if you're trying to trade off of that, because that probably means it's a stock that's going to be chopping around VWAP and not really going to move away. One way that I like trading it is if it reclaims a VWAP after spending all day below or above VWAP, suddenly finally making it on the other side of that. That could be a big deal, and you can actually see some good rebounding in a stock like that. The stock crossing over VWAP in general could be the opportunity for a trade to start setting up. What about pre-market VWAP? You can use VWAP in pre-market. Think our swim charts have VWAP in the pre-market. Obviously, it doesn't do as much volume many times in pre-market, depending on what stock you watch. But it can be a good reference for some pre-market trades or entries. Or you can use what's called an anchored VWAP. Some platforms allow you to click at a certain point on your chart, and it starts calculating the VWAP from then on. So that could be really helpful if you just want to know what the VWAP is for, say, like when your entry is. Say you just get into a stock and you're like, well, I want to use the volume weighted average price for when I entered on as my trailing stop. Another great way to use VWAP. Let's take a look at some actual ways that I traded using VWAP. First off, we're looking at BABA. Beautiful daily level here at 310. Look at this nice level. You can see we touched it 3 times here, another 3 times here. We couldn't close above it either of these times. And so this is a pretty significant level. You know, we managed to kind of push our way up here. Nice, decent, strong stock up. Obviously, the BABA gaps a lot with headline news. It's a China stock, a lot of China headlines, but really good level to trade off of right now. The next day, it gaps up, and it gaps up over that level. So in my mind, I'm like, all right, you know, we're actually opening up above this level for a change. So I'm going to play off of, you know, I'm going to be long bias. And in this case, I actually made money on this trade, but like I said, it was because it was momentum based. But look, I just wanted to show you, look at how it respected VWAP. All right, it respected the hell out of it here on the drop, respected it here. And as we start kind of moving up and wedging into here, I bought a whole lot of size because then my stop is just kind of through these lows. I got a nice little pop here. You know, you got 2 points from peak to trough. I caught like maybe a point within here total. Not the greatest trade I've ever seen. Look, it reclaimed VWAP and eventually moved back down. This doesn't work all the time, but it was a great momentum trade. Let's look at some real trades here, okay? I just wanted to kind of show you that one. Peloton. I might have even shown you this chart before. I love this chart. This is such a clean trade that I made, and I think it's such a great learning point, which is why I bring it back. $100 level, good psychological level, good level on the daily. We're kind of wedging up into it. We've spent 2 days kind of trading here. The next day, we open up right above 100. Good sign. We do this little dip here. You know, this little flush out, and that happens all the time. And then look at us. We reclaim VWAP, kind of mixed in here with this moving average in here. We reclaim it. They try to push us below, and they can't do it. They can't push us below VWAP. They can't get us back down here. And at this point, as soon as you see it start to drive for new highs, and you see that momentum, it's on, baby. Let's get the squeeze going. And at that point, I bought. You know, you can do whatever you want here for a trailing stop. You can do a moving average. You could do VWAP itself. You could do, you know, the last 10-minute low, consolidation lows, whatever. But this thing ran. As soon as you could see it reclaim VWAP, it consolidated above the opening print, above pre-market range, above VWAP. Those are 3 key things for me right there. And above a daily level. 4 key things right there that makes this, in my mind, borderline an A-plus setup. I think this is an A-plus setup, honestly. It has so many beautiful things in its pocket here for me that, you know, it's very easy to have a bullish thesis here. INO. Look at this nice kind of wedge that we have here. Going up into this key price, I think this is like 19 something, 18 something, and yeah, 18 like 20 maybe. We're going up into this price. You know, we bumped up against it, bumped up against it, bumped up against it. Nice little kind of bounce here. And so going into this day, I had a long bias. We opened up below, but using VWAP, I had a loss in here first. You know, I saw us do this little dance, and right in here, I bought on this Pierce. I bought as we kind of reclaimed up in VWAP. But as soon as we crossed back below, and I see we've now put in 3 lower highs, we've been unable to hold above kind of this key level, this key resistance that this stock has. We've now moved below VWAP, so you better believe I'm out at that point because now we're moving back down. And as soon as I see us start to make a new low and we failed VWAP, I'm shorting. If you're flexible as a trader, you know, the sign of a really good day trader is someone who does not have to be marred by their initial bias and knows, well, okay, if it fails this resistance and starts making newer lows, like you could have some people like me, you know, I'm sure there were a ton of people here who was ready for this thing to break, and they got suckered in. And as soon as it started failing, they all have to get out. Keep that in your mind. You know, what is everyone else doing? And so, you know, flipping short in here on the failure of VWAP, pushing towards new lows, you actually got a pretty nice drive down here. You got a nice point on a $17 stock. Nice drive down. And then look what it did. That was actually the start of a move back down. That failure here, that failure of this 18 kind of 40-ish level, that failure of VWAP was the last time this stock tested this high, and it was kind of the start of the end for this stock. I'm not saying you would have known that and you swing that, but that's just a good sign that, sometimes that's the final battleground. Let's look at another one. IPOB. I love this setup. Look at this clean wedge right into VWAP. This VWAP was a perfect lid on this stock. It breaks VWAP with a volume surge. And at that point, you can buy here on the momentum and just set your stop down some of these lows, set it below VWAP. Or if you're one of those people that needs confirmation, you had a nice kind of flag here, a nice kind of consolidation, and you can buy when it starts going back up. Look at the volume surge when it starts going back up. You could have waited for confirmation. Sometimes you can't. Maybe this broke and it just kind of kept going. So you need to be, understand that. But in this case, you had several opportunities. The people who really wanted this below VWAP eventually lost. They couldn't bring it back below. You had several trade opportunities in here. It was a really clean trade. Look at another one, MLHR. And I love this one. This is one that I like because, look, VWAP isn't some magical thing where it's not going to be able to pierce. A lot of times you get moves below VWAP. You get shakeouts. And so I'm pretty sure if I was buying in here on an earnings breakout, these long wicks, if I was in, probably got me out. I'm probably like, I'm not going to hold on a move down like this. But once I see these wicks start to make higher lows, and once I see they can't close it below VWAP anymore, I'm interested. And then I see that they right here can't even get it down to VWAP. As soon as they start moving this thing up, it's on, baby. Let's go. Volume weighted average price is holding now. They can't even get it below. We're consolidating right above these highs, above the opening print, above VWAP. We're starting to move. Volumes pumping. We've got a news catalyst. We're above someday on the high or on the daily. We've got a good long on our hands, boys, and so it was a beautiful long. Let's look at another one here. This is a good example of some chop. So I wanted to mention that sometimes VWAP, you're going to have chop off of that. And this is kind of a sign as why I usually do momentum-based trades off of VWAP, but sometimes, you can have some good trades. If I traded this one, I probably lost money. You had a nice wedge here. Nice kind of higher lows. They can't hold it below VWAP, consolidating above VWAP, consolidating above the opening print, consolidating above pre-market highs. And then you have this breakout. It was really good trade, really good entry. And if it was momentum-based, you made money. But if you tried to hold it, you probably broke even because even when it came back below VWAP, you're back at your entry price. If you tried to play the failure of VWAP, that subsequent break of VWAP, tries to get over, can't do it, you probably made some good money on the downside. But after that, it's just chop central. But, it still respects VWAP throughout the day to an extent. It still kind of becomes this inflection point. So, you had some momentum trades off of this, but this was still a choppy stock. Another trade. Good one here. Okay, RKT gapping down, does this little curl up here, but at this point, look at us kind of consolidating here. We're consolidating, and I actually took this one short despite us being above VWAP, and I'm going to tell you why. This boy right here. This wick right here, as soon as you see this push up, if you were long here, that's fine. But you need to realize that, when this happens and when we start cracking down here and we're approaching VWAP, you need to be thinking, was this a trap? Was this a fishing lure out there for those bulls? Was this there to wick out any hard stops that were sitting at highs here? Whoops. And is that kind of going to be, is this now about to flush out? So if I was long in here, you see it flush, you start flipping. You flip or you get out. You don't have to necessarily flip. But in this case, if you flipped, got a great break, nice kind of move down, got another 2 points off from peak to trough. Nice little kind of inflection point. And then we chop around VWAP for the rest of the day. But look, VWAP flattened out. So that's another good example to talk about on here. VWAP flattened out. If VWAP flattens out, you really probably shouldn't be trading it anymore. Like I said, that beware the flat VWAP. As soon as VWAP flattens out, the stock is usually flattening out. Flattening out, started to curl back up here when this started going, so maybe that's a little conviction for you, but beware the flat VWAP, later in the day because the volume's dried up and it's probably not going to be able to continue. So that's that. Now we're going to talk about another one, and this is my last one before I hand it over to Mike. It's called the slow rollover. And I kind of gave it this name. I only kind of It's kind of a, it's going to be hard to quantify, but when I show you some of these charts, I think you're kind of going to understand it. Usually what's going to happen is you're going to be using levels like the opening print, VWAP pre-market lows, low of the day, and you're going to see that stock just slowly roll over, and you're going to suddenly start to see it accelerate on the way down. It's like a timber, like a tree that just slowly falls over, and you can see it happening. It's like a curling action. And so when we go through these charts, you'll see it. Sometimes you'll see that one last ditch effort to just pop itself back up, and if that thing gets smacked back down and it's a wick up there, even more conviction. Good sign is to watch volume. Is volume going to start accelerating on the downside? And if that is happening, get ready for a move. So when I'm trading the slow rollover, if it's trading below VWAP, repeated wicks above VWAP or some resistance is actually pretty good, because the fact that it's trying to punch itself up there and can't close up there, can't hold up there, they can't do it. If it starts to roll over, then that's good, because anyone who is baited in there is now getting out, and it's shaking out weak hands, and people are going to chase back into this thing, and volume should probably surge. These slow rollovers can start in pre-market, and I have some examples where they do. I've gotten in pre-market because the momentum just kind of started in the pre-market. These are momentum-based trades. The whole thesis of this is it's just kind of this quick drop and flush as it just kind of rolls over and falls off the bed. You don't want to wait for this thing to suddenly catch itself and bounce at some point. Now, you don't know when that's going to be, but this is, for me, a purely based trade. And you can use a moving average as well. And a lot of times if you have a moving average on there, it doesn't matter which one, it's really up to you. That'll actually help you visualize and see the lid on the stock and physically see the rollover. So let's look at a couple. RKT. Look at this. So remember, the pink line is VWAP. The blue line is one of my moving averages. Tries to get above VWAP, tries to get above VWAP, tries to get above VWAP. And at this point, this moving average became a lid. You can see it start to roll over. I have no trade in here. I don't see really any edge. Maybe you could have shorted it above VWAP if you saw it failing here. That's perfectly acceptable on your trading style. But once you see it start to roll over, you see the volume start to accelerate because you see people starting to get in or pile out. And then you got this one last ditch effort. Oh, let's get up. Nope, can't do it. And as soon as it starts going back down, you've got the momentum, baby. And this thing went from 29 to 27. You had a second rollover here to an extent. They tried to get it up, they couldn't do it, and then roll back over. You can physically see this thing slowly curl. And it's great. You saw it fail to get above VWAP several times. It did this last ditch effort. Volume accelerated. Beautiful, beautiful, beautiful. CRDF. This one had a little morning chop. Popped up in the morning, did some dances and had some fun. In this case, couldn't get back above VWAP. Had one little wick up here. That's a good sign it tried. Now suddenly the moving average that I like to use to keep an eye on is suddenly a lid on this thing. It's trying. And as it starts going, you see the volume start to accelerate, and so you actually could start putting a little short on here, and you can catch a little bit on the downside. Not the biggest move you've ever seen. It's just another little bit of a rollover here. HYLN. This is another good one. This is a really good one in my opinion. This one actually had a morning squeeze. Eventually crossed itself back out below VWAP. Then kind of set in this little consolidation. Tried to drive, couldn't do it. Couldn't even reach VWAP. Pathetic. Then, with this moving average, it couldn't get above. Oh, God, here we go. And, you see the volume start to surge in this thing. You see the volume start to pick up. Just take a momentum trade. You got 46 to 41. And this thing hardly ticked up. Great trade here. Great trade, in my opinion. Hell, you could even have taken the second one where they tried to drive this thing up. They couldn't do it, and then it starts to go down again. This is all pure momentum-based, okay? This is a momentum-based trade for me. JKS, Jinko Solar. This is a midday rollover for me. Not the best, but it actually turned out to be a little profitable for me. Did a little dance in the morning here, kind of tried to get above 88, couldn't do it. Eventually held, retested VWAP. This retest of VWAP gives me a little more conviction because the fact that they tried to bring it up there and then couldn't even retest VWAP again, and then you start to see it catch below. It's not so much a rollover as this much as really just a flag below, kind of a a consolidation below a flag here, right below VWAP. Couldn't do it. You actually see the volume accelerating on the downside. Great thesis here to short, put a stop above VWAP, put a stop up here, do whatever you want with your stop depending on your price target and your risk reward and your trading style, and you got a really good short on that one. Let's look at another one. BABA. This is a good example of one that happened in the pre-market, and you can see it. First of all, moving average, kind of acted as a good lid, but you got to realize it's pre-market, so volume is, going to be a bit of an issue, and it starts to roll over. You see it start to just kind of tip over, and I actually started shorting right when we broke these lows here. This was kind of my key point here that I was going to watch. And once we started breaking, I actually started shorting in the pre-market. I'm glad I did because this thing kept going and then really flushed. Then you got that volume surge, that momentum, and it flushed down. Really good, easy, clean rollover. Let's look at another one, CRM. This is a good one in the pre-market because look at VWAP. My VWAP does take into account pre-market and pre-market volume. Tries to get above, tries to get above, tries to get above. Now keep in mind, in pre-market it's going to be thinner, so there is risk. But you could have waited for the open and just shorted on the opening print if it's still at a good level. In this case, it is. Whoops, you can see it start to roll over and it cracks and you get a beautiful momentum trade down there. It was a nice clean trade and it just slowly rolled over in beautiful momentum. So look, the VWAP the slow rollover trade isn't really so much a setup, but it is, it's a feeling. You need to be able to understand what the psychology of the stock is. And the psychology here is that bulls kept trying to take control of this thing. They kept trying to drive it higher and they couldn't do it. And eventually you saw the volume surge on the downside as they have to get the hell out of the way. Anyone who covered is going to try to reinitiate that short and chase it lower. The point here is we're trying to see where the FOMO is going to kick in for people and really try to get in right before. Same thing as the end of day squeeze. I love the end of day squeeze. You can see that with volume. You can see it with a level with a news catalyst. And then also off of any VWAP play. Volume's great. VWAP is obviously going to be a big kind of component here and a big important level to trade off of, and it can provide a lot of opportunity. Now I'm going to pass it on over to Mike. He's got some really interesting stuff to show you. He's got some really cool setups with options and with looking at the index, how he trades the market generals, relationship trading, and I think he's got some unique stuff that some of you probably never thought of. So I'm going to pass it on over to Mike. I really appreciate your time with me. I'll see you all next week, but take it away, Mike.
Thanks, Nick. I appreciate that, and I'm excited to be back here today. I got some exciting trade setups to show you. Every trade that I show you today are trades that I have actually taken. And again, this is not meant to be an all-encompassing of every trade setup out there. It's just to give you an idea, just a touch of how some different setups work and how different traders trade. I know Nick's very good at what he does. That's why he's at the fund. He's our head equities trader. And you definitely getting him to share his trades is very exciting for us. So I'm going to get into my trades, but before I do that, what I want to do is I want to set everything up. So, how I analyze the trades, what I'm looking at. Now, I'm not going to go into a lot of this stuff we've already talked about. This is a long class, right? And then this is not meant to be, again, all-encompassing. This is not meant for you guys to trade our trades and stuff like that. This is meant for you to get a taste. And a lot of this stuff we've already gone over. And so I'm not going to go into too much detail in some of the stuff that we're talking about, but you're going to get, we'll go into detail in the trades, the thesis, and what we're looking at and the tools we're looking at. So let's get started. The first thing is, the most important thing really, if you're going to do and set up your trade system, right, and you're going to have a trade strategy, the one thing that I definitely recommend, right? I just went in and said, don't do what I do, come up with your own system, right? But the one thing I would definitely do is have multiple time frames, right? You want to look at multiple time frames, just like we want you to be in alignment with your system, okay, with who you are, with your mission, with your values, with your beliefs. Everything should be in alignment all the way across with your whole trading plan that you're putting together. Well, it's the same thing when you're looking to trade stocks, right? Or whatever other securities you're going to trade, whether it's options, futures, Forex, whatever it is. You want to make sure the trade is in alignment with what you're looking to do. Okay, so the first thing we always do when we're looking at a trade is we look at the long term. Okay, we want to see what is the long-term thesis. Is the stock in a bull market? Is the stock in a bear market? And a lot of traders, they don't even look at the long-term chart. So we do. What I look at, I usually try to pull up the monthly, the weekly, and the daily. Okay, and I try to get a feel for. Okay, where are we? Are they all in alignment? Are we going up? Are we going down? Where's the stock going? Where has it been? Okay, and typically what I do with my charts, and next week I'm going to actually show you how I set my charts up and how we set our trade station up. So I think that'll be pretty good. But what I do is I will look at the weekly levels, right? And really monthly for me is just confirmation. But I will look at the weekly levels, and I usually will look at the value zones, okay? And I'll get into this next when we go into levels and stuff. But I will look at the weekly levels, and put that on my charts, and I will look at the daily levels. Once I have the overall thesis, once I have made a decision on where the stock's going in the long term, then I look at the intermediate term. Okay, I want to know, and I typically look at the hourly chart, extended out, and I look at the 15-minute chart. Okay, they give me a good idea of what's going on in the intermediate term, and then I make sure that the intermediate term is in alignment with the long term. Okay, and then what we do is we'll take a look at the short term, and that's where we drill down to a 1 minute, 5 minute. Some people go down 2 minute, 5 minute. It really doesn't matter, but the short term is really, if you're a day trader, that's where you're going to trade off of. Okay, the short terms you're going to trade off of. So your short term, intermediate term should really be most in alignment. Now, if you're swing trading, typically you're going to trade off the intermediate, and then you're going to want to be in alignment with the long term. The best trades are the ones where all of the time frames are in alignment. So make sure when you're analyzing a stock, okay, you know what your time frame is. You look at all the time frames, okay? And what's important for us is that, look, I have several different moving averages on my charts and stuff like that. But what's important for me is if the price for the stock I'm looking to trade on the daily chart is above the 9 and the 21 EMA, then I consider us to be in what I call an active sequence, right? And then I'm really moving more into what's called a tiered trading system, okay? And typically the way I trade is I usually will put a half of my position sizing that I'm going to typically go in with a day trade. I'll put that in as an anticipatory trade, okay? I anticipate what's going to happen, okay? I have a shorter time stop usually. It usually has to happen right away. And then once my trade triggers, I usually put the other half in. Okay, that right there is my day trade. Okay, then I will somewhere around there I'll add in my swing position trades, which will be like a tier 3, I would say. And then what'll happen, I will trade around that position. So the day shares that I've put on, I will trade out by the end of the day, and I'll trade it out as a typically it's a profit, hopefully, and then I'll leave the swing position on. So the reason I like that is because now I'm in a swing position, I've already booked profits, and it takes the risk and the stress level out of it. And then occasionally as we go through the swing position, I'll trade in and out of the swing position as we go forward too. So if we get a big gap up, I'll typically take my profits in the swing position, and then as we get a drop down, I'll reinitiate and reinitiate my position. So and that's a tiered system that we kind of use. Other traders kind of use the same kind of tiered system. Some use different tiered systems. So that's what we like to do, but only if the price is above the 9 and 21 EMA. Now, some important price levels. Okay, price levels are really important for the way I trade, okay? And if you look at my chart, it's color-coded. I'm a visual person. I like to have, I have a lot of charts up on my screen. So I like to know, just by looking at the color, what level it is. I don't need to know, and hone in on the chart really closely. Is this, the daily level? Is this a weekly level? Is this an hourly level? Is this a point of control? I have all kind of coding systems and very visual, so So all my charts, it's all the same. So I can look at my 6 screens, and I can look at the screens that have my stocks that I'm trading or potentially trading, and I can just scan those charts and visually notice where stocks are compared to what zones. And that's really important for me. But you got to get whatever system is good for you. Okay, now what I look at is the daily levels. So the prior day is really important. Because what I'm looking for is I'm looking for major support and resistance. I'm looking for gap levels, okay? And when I'm analyzing gap levels, right, when I'm looking at the daily chart and I'm analyzing gap levels, I like to mark off this, what I call the scene of the crime, right? The scene of the crime can also, I look at that when we have a news event. So if you have a stock that drops really big from a news event, that where it dropped from is important to me, right? Because what we did was we went out of balance immediately, artificially, based on some news event. Now, if we've pulled back up, it's important to know, because typically then it's like a rubber band. If you stretch it, it's going to go back. And if you artificially, buyers sold artificially because of some news event, they just didn't want to get stuck, they couldn't understand it, then typically they're going to want to come back in, and typically the market's going to go back to that value area. So that's why I call it the scene of the crime, and I like to know, where do we drop from, okay? If you use Fibonacci levels, which Tyler did a great class on, it's the same thing, right? It's where we drop from. So that's really important, especially when you're looking at gaps, because gaps have a tendency to fill. If you're looking at levels that had news events, that's really important as well. And again, if we have the 9 and a 21 EMA and the price is above it, then we're in an active sequence, and I'm going to trade a little bit differently than if price is below the 9 and 21, or if it's in between the 9 and 21 EMA on the daily chart. Now, I'm also going to look at the weekly levels, and I'm going to note the prior week's high and low. Okay, I want to know where that is, and then I'm going to look at the hourly levels, any intermediate support and resistance. Okay, as we go through some of my trades, you'll see where I've kind of marked some of that stuff out. Then I'm going to look, and as we're moving our way down, I'm going to look at the pre-market levels. Now, you typically use a 5-minute chart or sometimes a 1-minute chart. And I'm going to look at the high, the low, and the point of control for the pre-market. Now, this market lately, I really haven't needed, point of control hasn't really been important in the pre-market. So you got to know what kind of market you're in to know what really is working, what's not working. And I'll take stuff off my charts as I realize, hey, the market's really not respecting those levels, so I don't need to know them right now. Because if I can clean my charts up, let me see more of the price action, that's really good. And by the way, when I do go over the charts, and next week I'm going to go over some Thinkorswim hacks if you do use Thinkorswim, because a lot of times you can save your drawings, right, under a different setting, and you can do it so you can actually occasionally take all your drawings off without losing them and have to redraw them just by changing the drawing framework that you saved. Right? And then you can go back and just with a click put those drawings right back on. Because sometimes you want to just look at pure price action, right? Don't get lost in all these levels and indicators and stuff like that. Price is the only thing that pays. And really, you got to get used to understanding just what the price does, right? A lot of the best traders, they don't have a lot of stuff on their charts. Okay, so don't think, I know usually as a new trader or a trader that's failed before, had some losses, they're like, I don't got the right indicators, I don't got the right stuff. That's not true, okay? It's really not true. Okay, so again, the pre-market levels are important. Why? Because that is the first piece of information that we have, okay, to tell us, are the bears in control or the bulls in control? Okay, now you got to be careful with it because it's later volume, different composition of players that are playing in the pre-market. But really, it's still good to know because it gives you, again, that piece of information. Now, what I add on my charts, which typically most people don't, is the any high volume nodes, low volume nodes. So I'll complete what's called a market structure, and I'll typically fade out those levels so I know where my nodes are, because the market typically is looking for fair pricing, value pricing, and what it does, it will typically go from one high volume node to the next. And again, remember the low volume nodes, they typically go through very fast. And I'd like to know that as a trader, okay? And then of course, I want to look at the point of control. Okay, what is the point of control? And it's nothing more than the price where, above it, the bulls are in control, below it, the bears are in control. Okay, so again, remember what we're looking at when we're looking at trades. All we're trying to do is one very simple thing. We're trying to find out who's in control. What kind of market we're going to have, okay, first off, and who's going to be in control. Are the bulls going to be in control? Are the bears going to be in control? Is it going to be consolidation day? Because, I don't want to get whipped around. Is it going to be an inside day, inside of the value zones and the parameters of the day before? So you got to know and try. The best you can do is have all this stuff to help you make that decision, to put the odds in your favor that you're choosing correctly. So now the indicators or tools, I would say, that I use once the market has opened, okay, are these, okay? I'll use the VWAP, okay, which we already went over. And, the reason I use VWAP is because it's based off the volume weighted. So it's based, all pricing isn't the same, okay? So we like prices that were traded at more of a volume and it has more of a weight, okay? And it's also the indicator that the professionals use to grade out whether or not, they were good or not as far as accumulating the shares that needed to be accumulated, okay? So that's the volume weighted average price. Now, the problem is a lot of retail traders now, it's funny, man, are using it. And, I look at all these education people and then, even like Russ and some of those guys, they were never using the volume weighted average price, right? And then now all of a sudden I see it in their education courses and stuff like that. So, the problem that has kind of changed the dynamic a little bit, because now there's liquidity pools because everybody's using the volume weighted average price, so you got to be a little bit more careful with it, okay? And that's something that you just got to realize, okay? Then the next tool I use is what's called the opening print. Now, the good news is for you guys is that most people don't use or even notice or even look at the opening print. Now, the opening print I get from my market making days and working up at Lehman Brothers. And so the opening print, a lot of traders don't understand it. They don't use it. So this is still something that can give you that edge, okay? So it's good to look at. And again, the reason I like looking at the opening print, now once the market opens, the pre-market goes away. And this now is the next closest piece of information that we have, okay, to really judge, are the bulls going to be in control or the bears going to be in control? Okay. I also like to use RVOL. Still not a lot of retail traders like to look at volume and stuff. Really only the prop firms and maybe more of the higher educated traders are using RVOL. So that's something that, it's still, you get an edge a little bit with it. And then on my daily chart, I'll have either the 22 EMA or the 8 EMA. And it really depends. Sometimes I have them both. It depends on what type of market we're in. Lately, I've been having the 22 EMA. It's been a little bit better in controlling the whips a little bit better. And then I have a tool that's been programmed that's called the VWAP slope. Okay, one of the biggest problems with traders not understanding VWAP. They only think, is the price above VWAP or below VWAP? But they never look at the slope. And I can't tell you how many traders come to me and say, Mike, man, I don't understand why I'm losing my trades. And they show me their trades. I'm like, well, why did you buy here? And they're like, well, because it's above VWAP. I said, yeah, it's above VWAP, but it's a flat VWAP. Or it's a declining VWAP. You shouldn't be buying a stock in a flat or declining VWAP. So I have a little indicator that kind of shows me at the bottom of my chart what the slope is of VWAP. It kind of helps, more of a visual thing again. But you don't need that. You very simply could just have, and look at the VWAP with your eyes and tell if it's a flat VWAP or a declining VWAP. So, again, it's all part of understanding, not just having an indicator, but understanding your indicator, understanding how to trade your indicator and how to use it. Okay, that's why it's really important. All right, so that's really what I'm looking at. So what I want to do is now I want to go into some actual trades. Okay, let's get into some trades. Let's look at them, and I'll kind of go through a little bit of the process that we did, and we'll talk about them and talk around them. All right, the first trade that I have up here is Fastly. Okay, Fastly, interesting company. We made a bunch of money on Fastly. It was a really good trader, and so here, what I'm looking at is the daily chart. So I got some lines drawn on there. If you look at the light purple dotted dashed line, that's the 9 EMA. If you look at the purple line, that is the 21, and then the blue is the 50, and the yellow is the 200. Okay, and so if you look at this, I like to see them stacked and pointing up. Okay, I like to see them at least going up, and I like to see them stacked appropriately, right? The 9, the 21, the 50, and the 200. Now you're not going to get that all the time, and that can be overrated. And I don't use moving averages as part of a trigger into a system. Really, I use them as an identification of what type of market are we in, right? What type of market are we in? What type of direction am I looking at, as far as what's going on with this stock? So looking at Fastly stock, you can kind of see almost a megaphone pattern happening over the last 3 days, which is kind of opening up wide. The good part is what I like to see here down on volume is we're starting to see some increasing volume, and more importantly, on the red days, we're seeing lighter volume compared to what we're seeing on the initiation days. So I really like this chart, and I like the way it was setting up. What I also like is that really the 9 and the 21 are kind of holding support. Now, I know a lot of traders are like, yeah, but no, Mike, it's really piercing through here and piercing through there. But, it's not an exact science, guys. Okay, sometimes, you're going to find price action that goes right down to the T and then bounces off. Sometimes it's going to pierce through. It's not like, this is an exact science. And I always like to tell traders, because when you draw trend lines, you draw price points, it is true. The more touches you get, the more stronger and the better it is. But what I like about them is that, sometimes it's really just an area. It's an area that you want to look at. So this is the Fastly daily chart. We were looking at this from a bullish standpoint. And then this is the hourly chart, right? And now we got some more lines on there, and you can kind of get it almost like a little bit, maybe a cup, a cup and handle forming or something like that, you can kind of see things are looking pretty good in this chart. I like where this is. If you look at it, we're back to where Monday's level was and almost back to where Thursday's level was. So, it's got a nice level to possibly break out from. And so I like that type of trade. Okay, so the hourly chart looking pretty good. Now, here's the 1 minute chart for the day, and you can see how this stock trades, and you're going to get a feel for some of my trades. And if you follow our trading show, I think it's at 1 o'clock Eastern time. You follow the trading show. We go over our trades all the time, and we go through the thesis and we go through the charts. And the reason we do this is so that you can see what we traded, so you can see how we traded it, what our thesis was, right? And you can go over them over and over them. That's how you learn. Okay, so this stock right here. Now remember, the first 15 minutes or more is price discovery. Now you also got to remember, prior to, about 2 minutes prior to the open, you have opening imbalances. Okay, so you got to be careful in the first couple minutes to 15 minutes of trading. And sometimes it's best to maybe wait. Now, if you have an initiation right off the opening print, then you're missing out on the boat. So you got to know what kind of indicators to look at and how to really filter through, to recognize this stuff. Now, if you look at this trade, in the purple line is the VWAP. Okay, in all my charts, the purple is the VWAP. Automatically on there, the dotted orange line is the opening print. The white line is the pre-market high. And then you have the gold line right here is an important level in the daily chart. And then you have the prior day's high up here over 90. Okay, so they're the important lines. And then this green and red line, always, it's a program that automatically pops up on my charts at 9:45, and it sets the 15-minute high and the 15-minute low. Okay, so I really like looking at the 15-minute high, 15-minute low, and sometimes I'll trade off that. So if you look here, we opened up and then they drove it down. Okay, so the first 3 minutes, we're looking at a 1-minute chart. So the first 3 minutes, initiation down, and we make and print our 15-minute low. Okay, then we get a nice big green bar up, and again, don't put too much consideration into volume. Okay, you might say, Mike, but there's some heavy volume on the down bars down that way. Aren't you concerned about that? And no, because there's a lot of orders that stack up, right? So through that 15 minutes or even longer, those orders stack up, and then the market maker has to work through those orders. You got retail traders, you got opening imbalances. So there's a lot of different stuff going on in the first few minutes of trading that I really don't count on, don't look too much at the volume bars in the beginning. Now what I do though look at, and then you can see this blue line is my 22 EMA for the 1 minute. So now if you look at this, they drive it down, and then you get a nice initiation bar up, okay, and then you get 3 bars up, and they bring it back up over the opening print, and we print our 15-minute high now. So we print the 15-minute high, and then what do? They drive it back below VWAP. Okay, typical. You'll see this type of trade all the time. So again, that's price discovery, and so retail traders typically are trading all in this time frame, and they're getting whipped all around because they don't know what they're looking at, right? So what happens? What we notice here, now we're getting interested because now after this red bar that went through, okay, the VWAP, the next green bar, okay, it does print a lower low on the previous bar, but it gives us, and now we go back up above VWAP a little bit, and we come back below, and now we're starting to consolidate around VWAP, which is important. So now we're drawing this little trend line here, and we're seeing this support wedge up into the opening print, which is really important, right? So then what we have is, that green bar, and then we see all these little red bars with these wicks, and it's, really coiling for us nicely, and it's holding the 22. So really, this is our cue. Now, remember, I am always buying in anticipation of a trigger, and a lot of times I'll get whipped around, okay, and I have short stop losses when I do that. But when you're buying anticipation, what I'm trying to do is get an edge on some of the traders and maybe looking at the same stuff. And if you look in here with this nice little support, so I'm buying right in here, okay, right before this big green initiation, because I'm buying in this chop here. Now, what would make me get out? What would make me get out is coming back down the VWAP and piercing it, okay? That right there, even a little pierce, I'm out, okay? Because it really didn't trigger for me, okay, with what I'm looking for. Now, you may say, Mike, well, what's your trigger here? Well, on this trade here, my trigger is the 15-minute high, okay? And I have a lot of those trades because, look, we're already over VWAP. We're already really kind of over the opening print. So I'm looking at this 15-minute high. Now, also remember what I said. I like it. It's really, the odds are in your favor when there's a lot of levels really close by. So I like the fact the opening print, the 15-minute high, and VWAP are all really kind of close by within a point of each other. So that's important. And then you have the pre-market high even closer. So you kind of have all these levels working for us. And I like the consolidation in here, this little flag. And so I'm buying. And then what happens when I get triggered, okay, I'm buying again. So I'm initiating, a half of my position right in here, sometimes a third, and then I'll buy the rest, or sometimes the other third right here. And then if it really is going to get going, I'll buy the final third right here on the break of the pre-market high. It really depends on the type of style that I have set up and how I like the day. Okay, well, right in here, what I do know we did on this trade is we bought anticipation here, and we bought on the break of the 15-minute high. Now, it came back down to the opening print, right? And it kind of held nicely in here, right? And so VWAP is sitting right here. And, this is a nice little trade, and it just goes from here, right? It kind of flags right in here, but it doesn't really violate this 22 sloping up, VWAP sloping up. Again, kind of go in initiation. Now, my first target is this daily level. This is where I expect it to have the first battle with some of the sellers. So I'm anticipating of unleashing some of my shares I purchased right up here. So when this breaks here, okay, I'm not selling here because, number one, it's not nowhere near where the type of trade that I'm settling in for this, right? It's just a pierce through, and, we're still pretty, we're widening the gap from VWAP, so we're looking pretty good. So it's just a typical pullback. And then, we get back up in here, and then, once we get up here, you can kind of see we that 1 minute here dojied. We dojied before we got up there. So I did take off some shares in here. That took off, a third of our day trading shares in here. But because we really didn't come back, weren't close to this 22, and then we initiated up. And now my next level that I'm looking at is the prior day's high. Okay, now we kind of come up here, come back, come up here. Now, when we kind of do this, right, I don't get wicked out. The reason is because really my next trailing stop is this level here. Okay, and it's this important level that's followed through, and it holds pretty well because I'm looking for us to attain this prior day's high. Then we come up here and we have 3 bars consolidating right around it, and that's where I get rid of share grouping number 2. So I got rid of a third here and then a third up here, and then what I'll do is I'll play it by ear. We'll see how this goes. Now we're seeing it kind of flatten out, and I also have time as kind of my other indicator, but it's my final grouping of shares, right? So I tend to let them run a little bit longer. And so right in here, you're starting to see VWAP starting to flatten out. We're starting to get to the 1 o'clock hour. So once we start falling here with some consecutive bars, we got out in this area here. But if you look at the rest of the day, they really hugged this this area here, this prior day's high. So if you look at this trade, pretty nice trade. It's a nice trade. I wanted to show this trade because it kind of meets all the criteria, and it's a good trade to learn from. Okay, let's go to the next trade. Next one is space. This was back in July, beginning of July. So here's a daily chart on space, okay? Nice little break above this little consolidation the day before. So I'm liking this chart in here. And then if we go in here, you can kind of see with space, this is the daily chart. And we got these levels in here. And actually, let me go back. Yeah, that was the weekly chart, and here's the daily chart. So, we kind of got these levels in here. Nice looking levels that are sitting there in space. Nice volume increase on this first bar up. That kind of pierced it, then they closed it right at this level. And then if we go to the hourly chart, you can see we're gapping above this level. So if we go back to the daily chart, I love stocks that gap above important levels. And if you look at space going all the way back, this is really the level of consolidation that we've been battling around in. And so if you're gapping above this, that means we don't have to worry about trying to beat our head. We tried to beat it up and it fell back down. We had a rest day and then we made another charge and we closed right at it, right? So now we're gapping above it. Good price action on the daily, the hourly, nice price action. And I like it because now we got a common stopping point for us. So let's see how this stock kind of played out. Well, here, and I should have put I do have the 1 minute, but I put the 5 minute on first. Let me go to the 1 minute first. Okay, here, the 1 minute really whippy on space, okay? So if you look here again, kind of price initiation out of this zone, okay? Then they brought it right back, nice big long bar. But, the important point here is we made a higher low. Okay, that's important for me, right, on the 1 minute chart. And you can see how whippy this is. And I think I told you guys, we always have the 1 minute and the 5 minute up for every stock that we're in and that we're trading. It's a lot easier to see, how these stocks trade. So if you go to the 5 minute chart, right, it gives you a little bit different story. So you have, nice, this is classic price discovery in here. So we're not scared of the first 10 minutes of the trading day. And you got a wick here and a wick here. So what I see is right in here, we have some common ground on the 5 minutes. So we have some nice support in here. So when you see a stock that's whippy, we typically aren't getting in, right away. Now, I do know on this stock, we did get in on a break, and this is the pre-market high here. Okay, so we did get in on a break of that, and it had another important level on the weekly chart that we got in that was important as well. So we got in, and then of course it pulled back down, and we went red into the trade. And we didn't get out because, again, higher low, higher low, higher low. We did come back through VWAP. We did come back through the opening print, but we didn't really violate this low here on the 5 minute chart. So that's important to understand, because you got to know, and you got to give your trade some breathing room. A lot of new traders, they don't like losses, and so they don't give their trades enough breathing room. So if you look here, you can see we eventually reclaimed VWAP. We eventually reclaimed the 15-minute high. And then once we started, really moving in here, right here is where we added our second tier. Okay, so we added a second tier right in here, and we were full into this trade because space doesn't give you a large ATR, so you can't really wait for 3 different levels to go through. And when you have a stock that's very whippy in like this opening is, you really don't want to go in full size right off the first batch, right? And that's what enabled us to kind of have some space in this trade, no pun intended. But you're not going to really get 3 entries on this type of stock typically. So what we did was, we got in here, second entry, and, we took it up and we followed it all through here. And then, really, you see a nice little engulfing candle right up in here. So, we got off with our first level, and then, I think it was somewhere down in here, we found support at VWAP, and then somewhere when we reclaimed up in here, we got out with the second tier. So, it was a good trade, but I wanted to show this trade because I want to show how you can really have some whippy price action, but still, if you're composed about what you're doing, you're not going to get whipped out. And you gotta, when you do see this type of price action, you don't want to go in full size on the first break, okay? I'd rather be less risky, make more money by doing it that way. Okay, let's go into the next stock, which is a short. Okay, so I want to show you a short that we did. This is Square. And by the way, a company that we were fundamentally bullish on, but you can kind of see nice extension from, 3 days to 4 days from 140 to 190. A little too far too fast for a stock like this, more of a heavy capitalized stock. So, you can kind of see these pullbacks in here. Now, the thing that we didn't like about this short was the fact that, the volume was a little bit later. So we're still fundamentally bullish on this stock, on these pullbacks, but we still felt there was some more to come and that we can get some alpha out of it. So let's see how, and again, this is the weekly chart. So let's see how this looks. If you look in here, okay, you can kind of see here the daily chart, and you can kind of see the rolling over action. Love this rolling over action. Now, what I'd love to see is a declining 9, and you see this little hug of this 21 in here, okay? So it's kind of hugging the 21. Now, if we go to the hourly chart, you can kind of see, we broke this trend line that we had going on the intermediate chart, and so we worked off an oversold situation right here, kind of brought it back up, so we're not oversold in here, which is kind of nice. And we have a level right down here, which is about 6 points away, so we got some space to make some money in this. So if we go to, I'm going to go to the 1 minute chart first. But if we go to the 5 minute, the reason I pulled up the 5 minute, I wanted to show you guys. So this is the VWAP trend indicator that I have on there. So I love it when you're in a short and you see nothing but red, red, red. That means VWAP is pointing down, right? Okay, and then you can kind of see the R vol in here. So we did have an extended R vol, but it wasn't too crazy. So that was another little bit of a warning sign. So what we have here is on the 1 minute, we had the prior day's close really close. We had the opening day's print right here. We had the pre-market low, prior day's low, okay? And this one was very simply a break of the 15-minute low. So, we kind of watched it come up here. We watched it come back down here. It printed the 15-minute low, but, didn't break through, so we weren't in a trade. Kind of got up here. Now, on these large bars here, we did initiate our first sequence, our first third of position right here as we broke the opening print. Okay, now as we came down here, we didn't really get in short in here because it's pretty extended on the 1 minute. We waited. We didn't get short in here either because it looked like it was going back to VWAP. And then we waited until it broke this pre-market low. So here is where we initiated our final position into square. So now we're full position short. Okay, we're short in here nicely, and now you can see here prior day's low comes down, kind of just kind of consolidating in there. It does break it, and then they're going to try to drive it back up, guys. Try to whip you guys out, especially on shorts. Okay, but if you remember, this is where this helps. When they try to whip you back up, look in here. Look what we're seeing. Nothing but a declining VWAP. Right? No reason to really get worried about that. And so they whip you back up and then they drive you back down. So our first level that we were looking at was right here. Here's where we got out of our short. Okay, at least half of our short, and then it kind of filtered around, went down, came back up, filtered, and then once we broke through here, that's where we're able to really get in and get some more alpha for the final shares that we had, and it was a pretty nice trade. So as you can see, today's habit of the week was patience. Well, you got to have some patience in here. You're going to get whipped around, and you can't be afraid of losing profits and stuff like that. Okay, one more trade here in this section at least. What I want to go through is a trade on Blink. And this is a trade that initially you guys, and I pulled this one specifically for this reason. This is a trade right here. If you're looking at this daily chart, right, this looks like a short, right? If you look at this, it looks like a short. We're below the 9. We're within sights of the 21. So it looks like a nice little short in here. And actually going into the day, we were looking at it as a possible short, okay? But of course, what you got to, we're going to talk about relationships in a minute. You got to understand that Blink is part of the EV craze, right? So we knew you got to be careful shorting a hot sector, a hot idea, or a hot story, okay? And which Blink is part of. Now, Blink is a for shit company. Okay, and I'm not saying anything really, try not to say anything about the management or anything like that, but I'm just saying they're not really, they're not one of those fundamentally sound companies that you should really be trading this based off of fundamentals. But if you look at this, you can kind of see right in here, coming in on the hourly, we kind of broke this nice little support level from the last couple days, okay? So you're looking and licking your chops typically on a nice short down to here, down to 10. But you got to remember storied stock. And also, if you look at these purple and blue, this is extremely oversold. So when we saw this and came into the trading day, we saw pre-market was extremely oversold. Our thought process was, okay, let's see what it does pre-market, and let's be careful and let this one filter out, okay? Because you got the 9 EMA sitting down there at 18. I think it's at 1881. Okay, so the 21 EMA is sitting at 1881. So let's see how it reacts. So we wanted to see how it reacted to that EMA. Well, here's what happened. So Blink, they popped it above VWAP, okay, but I don't know who would be buying off the open here. And you got to remember, this stock was gapping down a little bit more. When you have a stock gapping down, that means, and you have a stock that had dropped the previous day and the previous day before that, you have a lot of shorts that are sitting in profit and are probably going to look to cover a little bit. Some of them are going to cover, and if they're going to cover, they have to buy the shares back to close it out. So typically, you'll see a little bit of a pop here. And so hopefully, though, you understand what's going on. Remember, you always want to look and think what's happening on the other side of the trade. Who's on the other side of the trade? These people, these shorts, they're going to be covering. How are they going to cover, et cetera, et cetera. So we didn't get suckered into the buy, but we didn't get suckered into the short here because because it dropped pre-market. The 21 was sitting just a couple points away, and they dropped this thing all the way down to the T. You can see the 21, this dotted purple line, dropped it down, found support, and then now this became what I call a tentpole play. And this is a VWAP tentpole where, they drive it back up across VWAP, okay? But that is the first sucker play, right? That's the sucker play. And this is when I was saying that VWAP has become more retail. There's a lot of liquidity sitting there for professionals to take. Well, that's where I came up with this tentpole play, okay? This is what gives me an edge over other market participants. And I did a whole class on it, and it wasn't too good, so I'm going to do a new one for you guys. But this is a tentpole play where they come back up, nice little dip buy, off an important level. They pierce through VWAP, and then they bring it back down. But the key is they make a higher low when they bring it back down. Then they drive it back up through VWAP, and that's when you buy. It's the second break of VWAP, not the first break, okay? This is the suckers play. This is the professionals play. So here we noticed when you see a stock that's a storied stock, okay, doesn't matter if the fundamentals are crap. Okay, this is a storied stock. We also, when we get into relationships, are going to talk about having the generals and the leaders up on your screen as well. Okay, when this drops back down, and provides support here, and then comes through and does a tentpole play, we were all in. Matter of fact, we were buying right in here. A third of position, okay? I shouldn't say all in, but we were pretty confident on this dip buy. We bought a third of position, and then once it broke the opening print, that's when we finished our position into this one, right? And then, as it consolidated around here, interesting how they consolidate the same levels. You noticing some patterns, guys? And then they drive it up to the 15-minute high, which it made in the morning. Okay, and then they consolidate around there, and then they give you another opportunity to buy some more, and then off it goes. And then we offloaded the first level into yesterday's high. Okay, and then as Blink, went up again, and it followed VWAP was really nicely. This is yesterday's close, by the way. So this was a nice little trade. So what we did was we were able to, kind of sell right here our final position, and it was a nice dip buy. And if you look here, if you look at this, guys, bounced off this level to the T. This is the daily chart, and of course closed right under the 9 EMA. And if you know Blink and follow it, it kind of just went and shot right back up. So nice little trade in Blink. I do have one more trade, actually. I said that was the last one. This is in NEO. Again, this is actually the leader for Blink. Okay, because NEO is really, so this whole EV market, right? You kind of have Tesla as the granddaddy. Okay, it's the old shoe in the bunch now. Hard to say that Tesla's the old shoe, Elon. Sorry about that. But, NEO is really, look, we were trading NEO. You can kind of see the flags in here on this daily chart. We've been trading NEO all in here in Aquin sequences all the way up. So really easy trader. Following this 9 EMA really nicely up. They're all pointing up. Very nice trade. Now, if you look at this trade, though, on a daily chart, consolidation of a high high break, right? Consolidation of a high break. And what you have is this engulfing candle here. So this can get kind of scary, right? It's kind of like a bearish engulfing candle, pretty big candle. But the reason we're not scared of this candle, because look where it came down for support. It came down right down to the 9 EMA, bounced right back up, provided a nice little trade. That dip bought the day before. As a matter of fact, if we go to the hourly chart, you can kind of see the hourly chart. Now we're kind of hanging out in this consolidation zone. So again, another good looking trade that we're looking at to possibly dip buy in here. Let's see how this one worked out. Well, same thing. Okay, same thing kind of as Blink. We have a temp pole play here. So they make the opening print. This one's a little bit cleaner. Okay, they drop it, drop it pretty nicely, make the 15-minute low, drive it through VWAP, okay? Then they bring it right back down to shake out all those retail traders, okay? They can't sit through that. And then they drive it right back up pretty strongly. They do consolidate it right in here. And then, of course, our first target, because we bought it right around here, is this pre-market high. They brought it right up to the T, brought it back down, and then, again, initiation up into the prior day's close, which is where we closed out this trade pretty early, pretty nice trade, and we were done. Yeah, we left some alpha on the table, but who wants to sit through all that? So that's a 10-pole trade. That's a trade that, really works good, and it's something to play into. So I'm going to go over some more trades in a little bit, but I want to kind of break down some more stuff that's important for you guys to kind of learn. Okay, you got to learn about relationships in trading. Okay, what I want to talk about next is relationship trading, because you got to understand relationships in the marketplace, right? That's where you're going to get an edge. Financial assets don't trade in a vacuum, and understanding relationships really, is important. Whether it's interest rates to stocks, stocks to bonds, stocks to the market, generals, leaders, trades and opportunities arise from these relationships. Now, there's 4 primary markets that most traders look at as far as relationships. There's relationships to stocks and bonds, bonds to commodities, commodities to the dollar, and, even if you're not going to trade bonds, commodities, or the dollar, you need to understand these relationships because it can give you an edge, and it's really important. So knowing, really, relationships and cycles tend to change when we go from an inflationary environment to a deflationary environment. And this is where traders make the mistake, right? Because they're like, well, I thought there was an inverse relationship here, but, they don't understand what kind of environment they're in. And that's why when we talked about a couple classes ago, understanding the big picture, it's not just so that you can understand if the market's going to go up or go down. You need to know what kind of market you're in so you can understand relationships and really truly get an edge. So when you have a top-down approach, you've got to have a top-down approach with really all financial assets. Remember, if you want to be a master, you want to become an elite trader, you have to understand, the whole market environment and what we're in, okay? And it's not that complicated, believe it or not. So during an inflationary environment, which means prices are rising, okay? And, at prices of everything, prices of goods and services, the cost of goods and services, everything is rising in an inflationary environment. So typically, because everything's rising, there's a direct correlation. Bonds and stocks, even though they typically would be inverse, would be going up together, okay? But you gotta, so now what you can look at is, does bonds take a turn? Does stocks take a turn? Because they will turn at some point, and revert back, because there is an inverse relationship between stocks and bonds, and typically bonds and commodities, right? So, but in here, you got inverse relationship in an inflationary environment between bonds and commodities, inverse relationship between the dollar and commodities, right? And so, you got to take that into consideration. Now, remember, if bonds are going up, what's happening to rates? They're coming down, Okay, so the rates are coming down, prices of bonds are going up, and so that's how you can really tell. So low interest rates, though, stimulate economic activity and, of course, boost corporate profits, right? And that's why when you see the Fed cutting rates, it's really, really positive to the market. But you got to be careful, because it's not like a deflationary environment is not necessarily good either. Okay, and so now what you have is stocks, bonds inversely correlated. Okay, you have an inverse relationship between commodities and bonds. You have a positive relationship between stocks and commodities a lot of times, and an inverse relationship between the US dollar and commodities. So what you got to keep in mind, like the time that we're in now with COVID, right? And when you had the US financial crisis in 2008, they're extreme events, and typically you have what's called decoupling. And you can't rely on a lot of things you could rely on before. So keep that in mind, because a lot of people are looking at, why is the market going up? Or we got horrible unemployment, we got a pandemic, people are dying, things are shut down, corporations going out of business. The reason is because of the Fed. Okay, the Fed's providing a backstop to the market. They're providing a backstop. Plus, where else are you going to invest your money? It's supply and demand, right? You're not going to put it in bonds because interest rates are close to zero. Okay, so really, where else are people going to put their money? So that's why you got to be careful. We get a little decoupling. Now, you also have a relationship from stocks to markets and stocks to stocks. And they actually you can figure out a correlation between the two. Okay, and if you get a zero correlation, there's no correlation obviously whatsoever. A 1 is a perfect correlation, which means if the market ticks up, a stock should tick up equally. Okay, a perfect inverse correlation is -1. I'd love to see those, because a lot of traders don't focus on those, right? Now, if you have a 2, that means the correlation is stronger. So if the market's going up, then the stock will go up twice as much, or inverse, or whatever you're comparing to each other. And there's websites and calculators out there that you can figure out these numbers. Now, there's also, you're going to see correlations in acquisitions, and Nick's really good on the acquisition thing. Okay, because what happens is you have stock A that's going to acquire stock B. And typically they're paying a large premium. And the question is going to be, is it an all cash deal? Is it cash plus stock? Because it's going to make a difference. And so a lot of times you can have some arbitrage situations pop up that really will play out nicely. And traders, if they understand that, can really pop in and make some good money. And there's people that just trade on acquisitions alone. Okay, so make sure you understand that. Then there's also earnings correlations, right? So if stocks A's competitors all have good earnings this quarter, well then stock A, what's going to happen is going to have typically higher expectations. It's probably going to go up with their competitor. So Nick went over artificial gaps. So you got to be careful, because now it is an elevated expectation, even if they're slightly different companies. And so you got to be a little bit careful, but you're going to have these stocks typically pop up and run with the sector and with their competitor. Okay, because traders think, oh well, if this company went up, then the market must be hot and the sector must be hot, and this company's going to come up. Okay, now there's other relations. I'm going to get into I'm going to show you some earnings. I'll show you an earnings example in a minute, but I want to finish with some other relationship examples. Okay, give you an example. Bitcoin is running all-time highs, just made all-time highs. So what's in play? Bitcoin stocks are in play, right? And so stocks that have any kind of correlation to Bitcoin, that may mine Bitcoin, that's a relationship, even though it's not a Bitcoin company, right? So example, MARA and RIOT, Riot. Mara and Riot are two companies we've been trading in and out based off of the Bitcoin plays, right? So Bitcoin's going up. Those stocks now have gone up and come out of the doldrums. So now we're trading those stocks because there's a relationship. The EV market, electric vehicle market, started running. So every stock out there, you got LI, you got Fuel Cell, you got Blink, you got EPV, you got them all running up. It doesn't matter about valuation. It's called a story. Okay, it's called a market story, and you got to be able to recognize these stories, because the earlier you recognize them, the better off it's going to be for you. I mean, you can make some incredible profits off relationships. Okay, the Joe Biden, I guess has won the presidency, right? But no matter what your political affiliation is, there's a play there. Biden stocks are running. The weed stocks, right? The China stocks, because, they're going to make China, he's going to be so not as strong on China as Trump was, right? So you got to look what, all of the alternative fuel and alternative energy plays, right? Because typically look at what their platform is and look at what, what's going to run. That's kind of like a fundamental relationship, but it works, right? And then, of course, we had a fundamental news thing happened when Pfizer and Moderna, they all announced, within a week of each other that they have very close, they have over 93%, I think it is, efficiency on their COVID vaccines. How awesome is that? Right? So that, no matter what happens, and the market did trade up on that news and then fell back down. Who cares? We're still bullish. You can't change the fact that is a fundamentally changing news event. When you have those, you need to reevaluate what relationships you're trading, what stories you're trading. So the reopening plays now are starting to get going. If you look at the charts of American Airlines, you look at the charts of Kohl's, you look at the charts of Cheesecake Factory, you look at the charts of all these reopening plays, you're seeing them, they've come off the bottom and they're running. Okay, and some of the, in the beginning, some of the other, the big cap tech stocks, some of the COVID plays, Zoom and Peloton came down. So you can make good money on that if you anticipate those trades and understand those relationships. So give a quick example on the relationship to earnings. So Snap had good earnings, 1029, right? Gapped up, really good trading day. Well, what happens? Pins, kind of same type of field, gaps up as well. Okay, on Snap's good earnings, has nothing to do with pins. Okay, nothing to do. Nothing's changed for pins, nothing to do with them. Well, if you look here, pins, kind of consolidated on that gap. So it was what we consider a pro gap that it did hold. And then they came out with earnings, and guess what? This is why traders do this. They had good earnings and they gapped up. So, this type of relationship can help you, if you understand this, can help you really make some good money. Okay, so relationships are important, and I can go on probably 2 more classes on some really unique relationships and how to trade them. We use the TLT, but if you listen to our show, you kind of pick them up, and that's why we do it, right? And I guess about a month ago, if you were listening to our show, I went over a trade that I had, and I went over it on Twitter, right? I put it out there, and where we had the TLT and JP Morgan and the relationship between the two, and we were able to catch a really low risk short on JP Morgan that made us incredible alpha. And it was really easy, and all because we just knew what the relationship was. So, find your mentor. If you don't have a mentor, listen to our shows, listen to other, make sure the people that you're listening to know, it doesn't have to be our show, make sure that they know what they're talking about. Okay. Okay. Now, next, let's get into market generals and leadership. If you have listened to our show, you have heard me talk about market generals and leadership on and on and on almost every single day. Because really the market generals and leaders are what I call indicators for me. Okay. Now, what are we talking about when I say market generals and leaders? Okay. The market generals are stocks that have been in the front leading us up. Okay, they're typically large cap index moving stocks because of their weighting to the index. Makes sense, right? So when we talk about the FANG stocks, they have a huge weighting. A small portion of stocks have a huge weighting in some of these indexes. Well, it's natural to think that if the index is running, these stocks are going to run. Now, I'm going to finish today when we talk about market internals and market health. I'm going to talk about how you recognize that, right? So our stock, I can't tell you how many times, when we were running up from the bottom, we were running up, right? But it was only a small portion of stocks that were actually running. The breadth was actually negative, right? And so, it was the market leaders, it was the FANG stocks leading us out. So naturally, we're going to be looking to them to see where the market is going. Okay, because you can't go anywhere without the leaders for long. The troops are all the other stocks being traded. So the market troops are the breadth, the true breadth of the market, okay? And if the troops are not on the battlefield or under attack, the generals must protect and they must keep on marching on. And that's what these stocks did. Look at Apple, look at Tesla, right? Look at Zoom. Look at what these stocks, these leaders that took us out and led us up out of the March lows, okay? Look at Peloton. And you also, need to identify what's the sentiment leader. Okay, and I call this the FOMO leader, okay, because it's the leader that you want to know that if people are still willing to put risk on, okay, they're still willing to put risk on, then this stock is still moving. And really the FOMO sentiment leader for me has always been Tesla, right? Tesla, even with them getting included in the S&P 500. Look, the last 5 quarters, I think, that they've produced revenue, they've had some positive revenue because they sold regulatory credits, not because they have a fundamentally good, sound company. Now, I'm not here to debate whether Tesla is a good fundamental company or a good company or not, because it's like you have a cult followed, a bunch of cult leaders, a bunch of cult people following. It's like a cult, man. So I'm not degrading Tesla. It's just a storied stock, right? So you got to understand storied stocks. And so Tesla is a storied stock. And so if Tesla's going up, right, and it's moving, then that tells me that traders are still willing to put risk on. Okay, it's my sentiment leader. Now, when investors stop trading that stock, it means the buyers are becoming nervous and that FOMO is kind of cooling. And then you may want to start looking for valuation to come into play. You might want to start looking for rotation. So you're always, again, trying to give yourself the best edge to identify when are we going to rotate, okay? What's going to be in play? Because you always want to trade what's in play. Now, you need to identify the leaders of different stories that are being traded in the market. This market's easy because there's always several different stories. This market, the stories is easy. You have and I got them down below. You have the COVID plays, and my leaders are Zoom and Peloton, okay? I mean, just look at the charts, okay? You have the reopening plays. Okay, and I have a couple leaders for that. One is Cake and which is Cheesecake Factory, and then Southwest Airlines is the best airline to me. And then you got commodities, you got gold and silver, and then you got big cap tech, right? Apple, Facebook, Microsoft, right? The FANG gang, and you can throw Netflix up in there and COVID stuff and stuff like that. So I have on one of my screens all of my leaders. I have my sector. So I don't break it up by sectors because it's not necessarily sector leaders. Now, if I'm trading a stock, I'll look and see who's the leader of that sector. Of course, right? But, for me to identify rotation, because I'll have my XLF and my other ETFs for all the different sectors and stuff like that. And the XLF will tell me about the bank stocks and whether they're coming back in vogue or something like that. But, the key is, though, you want to have your leaders. So I have up on my screen, I have them segregated. I have my COVID stocks, I have my reopening plays, I have my commodities, I have my big cap tech, and and I have my ETFs for all my different sectors that I want to follow and I care about. And so I look at those right there, and that helps me quickly identify my rotation that I may be seeing, what stocks I should be in, and it helps me identify when to maybe I should be getting out of some stocks. Okay, so this is important. So your job is to be really good at identifying what the stories are that the market is trading. Okay, what's the story? What's the thesis that the market is running on? Okay, because you can't, the problem most traders have is you can't let your opinions, your ideas filter into this. It's about what you're seeing in the marketplace based off of price action. It's not based off of CNBC. It's not based off of some, chat room. It's based off what you're seeing, because you're the one that has to get good at this. If you want to be an elite trader, look, elite traders are, we gave it to you yesterday. Okay, what 3 levels of traders and how much you can make and yada, yada, yada. If you want to be an elite trader, you're not in some kind of chat room, okay, getting ideas off chats and listening to people. You have no idea whether or not they have ever traded stock in their life, if they're even positive, okay? So you need to learn this stuff yourself. You need to be able to develop the process to be able to identify this stuff yourself. And you need to filter all the other garbage out, right? Most people, they're out there, they're like a sponge, and they're letting all kind of stuff into their brain. I talked about this the first week. And, it's really important you filter what comes into that brain, right? Because it will have an impact. The brain will, your brain will believe anything it is told, and it doesn't matter if it's true or not. So make sure, just like they say, you're going to turn out how the 5 closest people that are around you, it's the same thing. You're going to turn into what you're allowing go into your brain. So make sure you have positive mentors. You're listening to good stuff. Okay, it's not for entertainment, it's to learn, right? If you're listening to our show, the reason we do that is to so we can get information so you guys can start thinking for yourself. That's the whole purpose. All right, 2 sections left. I know this is a long class, but really important class. I want to go through some market internals that I use. Okay, how to understand the health. And the reason I'm going to go into this, because really it's going to go into the last section, which is I'm going to show you how I trade the SPY. Because I have a pretty good trading system in the SPY where I can pull in, anywhere from 35% to 95, 100% just in some quick option trades. And so, I just want to give you a taste of a little of that and how I trade the SPY and how you can trade the SPY. But more importantly, because even if you're not going to trade the SPY, even if you're not going to trade options, right? What I want you to do is be able to understand market internals. Okay, see, you need to look under the hood of the market to see what's going on. Okay, I'll give you an example. How many of you ever seen someone, right, who maybe knew him personally or just knew him from afar, right, through a friend of a friend or whatever? You knew someone who on the outside looked really healthy. I mean, they're active, they're running, they're working out all the time. Then one day you hear the news that they dropped dead of a heart attack or some other ailment. How many people have seen that, right? Well, see, what happens is what you see on the outside is not always reflective of what's going on inside. And it's the same thing with the market, okay? If you can quickly identify areas of inefficiencies, you quickly can identify an overbought, oversold area, you can get an edge, right? And so you don't want to buy when the market's overbought, right? Because good chances there's going to be a pullback, even if it's going to keep on going, and that pullback may shake you out. Okay, so you want to identify these areas and be able to identify, what is the health of the market? Because you want to look for rotation, like I talked about, right? Where's the positive and negative flows? You want to look for divergences. Divergences is a key market edge. So when you're going through, put your trading strategies down together, your personality type may be, if you're constantly a contrarian, okay, then maybe you'll be good at trading divergences. Okay, and a divergence is nothing more to where you see the RSI making a higher low then what the market is doing, you're saying that's a divergence, but the market's in a new low, so it may be get ready to turn. But the key is you don't trade off that. It just now rotates your attention to that so that maybe you can use some other indicators and catch that if it does turn, go back up, right? So it puts the spotlight on it. That's the key. And then, of course, like I said, you're looking for these extreme temporary conditions of overbought and oversold. Now, I have a group of indicators that really is what I use to show the composition of the current price action, okay? Remember, it's all based off an auction process, supply and demand, okay? So you got to remember that, okay, as we're going forward. And you got to remember, you know, these indicators I'm going to show you are considered leading indicators. That's important, right? You know, and not lagging indicators, but leading indicators. So the indicators I'm going to go over that we use to assess market health, and there's a couple others that a more advanced class I'm going to go into, but this is, if you had these in your toolbox and you understood them completely, this is enough for you to become an elite trader, okay? It's the tick, the trend, the ADD, the VIX, and the cumulative tick. Now, let's look at the tick first. The tick is an indicator that measures the net number of stocks that are upticking or downticking on the New York Stock Exchange. Okay. Now they also have the tick for the NASDAQ and the S&P 500 as well. Give you an example of how this works. So there's roughly 2,800 stocks on the New York Stock Exchange. So if you have 1,800 stocks that have made an uptick, okay, and you have 1,000 stocks that made a downtick, then the tick index would print an 800. That's the difference. Okay, so so the key is if a stock is trading with an uptick, that means someone is paying the offer to buy it. And if a stock is trading with a downtick, someone is selling the stock on the bid. Okay, so this is a real-time sentiment indicator. And the reason I like to use the NICE one is because it's more widely used and it's more broad-based. Okay, I also, as you'll see, I overlay the NASDAQ as well, so I can look for what? Divergences, okay? And, you know, again, the tick helps to identify temporary overbought, oversold areas, okay? It also shows extreme areas where there's possible capitulation. And it's a leading indicator if stocks have reached their highs or lows, but they're creating a divergence from the current price action. And again, for a lot of this for me is direction, okay? So let me give you an example. Let me pull it up of a chart. Okay, so this right here is a chart for the tick. Now, I have the cumulative tick down below, but we're going to talk about that on a different chart. Don't worry about the below one. Okay, so where's the overbought areas? Well, zero is the zero line. That's the even line. Okay, so if we're above zero, there's more people buying. You know, you have more upticks than you have downticks as far as stocks are concerned. Okay, now where the first level of overbought is this gray zone from the 600 to the 800 level. That's considered overbought. Okay, and you know, the extreme overbought is over 1,000. Now, if you look here, I just happened to pull a chart that was obviously what? Was this gapping down or gapping up? Gapping up, right? So this is obviously was gapping up. Okay, and you can kind of see, you know, it started in the extreme level and has come down, okay, and, you know, as you look, you also have the same reverse levels on the oversold level, right? You have minus 600, minus 800, extreme oversold, minus 1,000. What I like to do is I like to overlay the 9 EMA over top so I can see the direction of the trend, okay? And if you look here, what I also like to look is how much time are we spending below the zero line? And right here in the beginning, we're not spending much time at all, so it should be a positive market, okay? Now, towards the afternoon, we start spending a little bit more time and dipping down, but you also can notice that we're starting to trend a little bit down the EMA until the point we get to about 12 o'clock that we're, you know, now spending some good amount of time below. Okay. Now, I also like to overlay the NASDAQ over top of it. Okay, because now I can see possible rotation pulls. Okay, and I want to show you this here because this can give you some good clues, and this is why I kind of pulled this one out. So if you look here, you know, the NASDAQ kind of following around a little bit, but if you look here, if you look right here, this kind of fell down. okay? The NYSE fell down, made a new low, okay? Came to minus 300 on the tick, but the NASDAQ didn't make a new low, okay? Interesting, right? And sometimes that can give you a nice clue. Okay, and what I do notice is you can kind of see, again, we are kind of trending down here, okay, with that line, but you can also see that, NASDAQ almost got into extreme levels here compared to where really the NYSE was. So it can give you some good clues and some good information, and the NASDAQ really never traded down below zero until we got over here. So NASDAQ, as you can see, was a little bit stronger. Gives you a piece of information that helps with conviction. Now, the next indicator is the Traders Index, which is the trend. And this one's always interesting, right? So the trend is a technical analysis indicator that compares the number of advancing and declining stocks to advancing and declining volume. It's an effective indicator that measures the oversold, overbought conditions that are a result of notional extremes. Okay? See, and again, what you have is as the trend widens from a neutral position, the neutral position for the trend is 1, okay? And you really don't need to get into all how it's put together and stuff like that. You don't need no formulas. You just need to know how it works, right, and understand it. So the trend widens from neutral 1. Reading it indicates that the bulls or the bears are gaining force, okay? So if it glows below 1, that's when the volume of advancers is greater in proportion to the number of stocks that are advancing, okay? So that's interesting because what happens is bulls tend to become exceedingly optimistic at market highs and increase the volume, but what you don't see is the market price of all the stocks reflecting that bullish sentiment. Okay, so it's kind of an inverse flip, right? So if the trend is below 1, it's bullish, the market's bullish, but if it goes below an overbought level, it could really indicate, all right, maybe it's time to sell. And it's the same thing on the other side. If the trend rises above 1, then you have declining volume is greater in proportion to declining stocks. And you typically have excess pessimism at market lows. The bears won out and are selling stock, but you don't see the correlated number of issues declining. That's important to be able to see, okay? So you can produce an oversold position to the upside. So let me give you an example of this chart. So if you look here, you have the neutral position of 1, okay? And then you have oversold, where we're kind of oversold. You got the bearish up here. We're bearish when we're up here. You're bullish when you're down here. And the oversold is the 1.2, which means oversold and extremely oversold is 2. So you may want to start thinking, okay, maybe it's time to buy. Okay, something to think about. And the same thing on the flip side. You got bullish down here and then overbought is at 0.8. Extreme overbought is 0.5. So you might want to maybe think about selling that were really, overbought. So that's how we kind of use the trend. I'm going to show you some trades and how I use it and stuff like that. Okay, relative volume indicator. We kind of went over this already. I just wanted to go over it real quick. This is one of the most important indicators for me. It's an indicator that's really a ratio, and it compares past trading volume for the same given period. What's the average volume for that same given period that you're looking at? Okay, higher relative volume is more in play. That means the stock's more in play because more traders are there watching it. Supply and demand. Remember, supply and demand. So what we like to see, what we like is a 3.5, right? Actually, what we like is 2 or higher, but I love 3.5s. Okay, because a 3.5 relative volume, that's the ratio, means it's trading 3.5 times its normal volume. Okay, so when you have a stock that has at least a 3.5, sometimes we were trading stock today, it had a 7. Okay, that means there's a lot of traders there. And, volume, remember, is fuel. Okay, volume is fuel. Plus, also, volume is really only one of the important footprints that institutions leave. Okay, so especially high absolute volume. Okay, now, you got to remember the difference between volume and absolute volume. Absolute volume is the volume that's occurring for the day, and it doesn't mean high volume, right? You need to filter what you're looking at when you're looking at stocks and volume. We typically like to filter it to at least 1 million shares a day traded, because we want to make sure there's enough liquidity for us to get in and out. Okay, if it doesn't trade 1 million shares, it trades only 100,000 shares. Well, think about it. If that's all that trades for the day, then you going in and out, it's going to be hard for you not to move the price if you're buying a lot of shares. So you want to make sure you're trading a stock where traders are. Okay, because traders they tend to cluster in certain areas. Traders are like pack animals. They're like pack hunters, right? And when they smell blood, the pack, on their little, I love it, man. Traders all have the same settings and their scanners and all this stuff. And so all of a sudden they're like ravaged savages. They all gravitate to the hurt animal that's being eaten on. But typically by the time you get there, you're usually too late. Okay, but they're pack animals and they're pack hunters. So if you have an RVOL that's less than 1, that means you don't want to take a very large position. I'm not saying you can't trade it, but you got to understand the odds aren't in your favor, and you got to be a little bit more careful and maybe not take such a large position. If the RVOL is higher, that gives me a little bit more confidence. Doesn't mean that I throw risk to the wind, because it's just one small little indicator, it's volume. Okay, so we've coded this in, right? And here you can kind of see, this security that, this is how we code it in. You can kind of see our RVOL for the particular, 1 minute bar that we're looking at is, the 5-minute bar that we're looking at is 7.81, 7 times normal. The daily RVOL also calculates the daily RVOL, and it's 3.61. Okay, and we're only 32% of the way through all the bars of the day. So that's kind of how we track it, and we got this little graph and visualization, but I kind of pin myself to these, to make sure that, we're hitting the RVOL, the stock that's got in play. And I usually put on my 5-minute chart, and I leave the volume completely off my 1-minute chart because it gives me more action for price volume. Right? Why do I want to have volume twice? Why do I care about absolute volume? I don't care about it. If I'm trading a stock, I already put it through a filter. It's trading at least enough shares that I want. So why do I look at absolute volume? It's bullshit. I'm going to look at RVOL. Okay, so that's RVOL. Next indicator is the ADD, the Advanced Decline Line. This is the indicator that plots how many stocks are currently trading above the previous day's close versus those that are trading below. Okay, we can observe changes over time by following this indicator, just like we do with stocks. Okay, and again, it's more about the direction of the trend, the strength of the trend, right? If major indexes are rallying and the ADD line is falling, it shows a divergence, which means fewer stocks are participating in the rally, which means the index could be nearing the end of a run. It's a good signal to gauge overall strength of the market and get conviction in certain areas. Okay, let me show you this on the chart. And again, I like the direction. I usually get a bunch of good information off the direction. So you can kind of see here, you got the 0 line where we're in even, right? And then, this traded down. Okay, you have your extreme overbought areas, extreme, oversold areas, right? So this would be extreme oversold. It says overbought. Apologize about that. And this is extreme overbought. And so what happens is, look at the direction of this trend. Okay, now I'm going to show you this chart next to the SPY chart and show you how this can give you a little bit possibly of an edge, at least get you aware of some things and looking for the extremes. Now, one other thing before I do that, if you have an extreme in a stock and there's over 2,000 stocks trading, advancing, typically that isn't going to reverse, right? Because you've got a lot of stocks going, which means everybody's in the pool, everybody's splashing around, and it could be an idea or a good day that we're going to have a initiation drive day. Okay, so that's something to take in consideration as well, and kind of shows you as well. Okay, so here's this ADD next to the SPY. And if you look at the SPY, what I noticed in the morning on this chart was the SPY was making new lows while the ADD was actually initiating out and initiating up. Okay, so, it didn't make a new low. So that, I like to look at this And I like to watch this, and this really can give you some clues. So right in here, this gave us our first indication to look for an up move. So we started lining our calls up. We didn't buy based off that, but we started lining our calls up and looking at our other indicators a little bit closely that, hey, we may have a market play in here. So this is how I use that to look, one of the ways. Okay, so I wanted to show you that. The next thing we look at is the VIX. I talk about it all the time. It's a real-time market index. It represents volatility. It's forward-looking. Okay, a lot of investors don't know that. It's a measure of really sentiment. It's sometimes known as the fear index, and it's constructed using the applied volatility on the S&P 500 index options, which is considered to be the leading indicator of the broad market. Okay. So, VIX, typically, if it's under 15, then typically, we're trading differently, right? We're not going to, we may not be getting many, wild swings and wild levels, and the market's going to be a little bit more tame. But when the VIX is above it, then you can get some whips, but at least it gives you some good volatility in action. And also, when we get to talking about options, okay, when the VIX is elevated, the premiums are elevated, right? So we talked about it in another class. So when the VIX is elevated, you may want to be selling options. So you've got a better chance of winning versus buying options. Now, the tick cumulative is the final indicator that I want to talk about. And this is one of my favorite. The tick cumulative basically brings the ticks together and kind of with some moving averages. And I want to get into the dynamics of this one, but what we're looking for is directional trend and crossovers. And this is another indicator that is going to show you, okay, typically show you when the institutions are buying and when the institutions are selling. So we want to be on the right side if we're trading on this type of day. So if you look here, you can kind of see right in here, the institutions were selling on this day, and then it went back to the institutions were buying. So, and you can see these little crossovers, and you can get more into that, but it's been a long class already. And so, this is one of my favorite indicators because it really hits home to me when I want to be on the buy side, when I want to be on the sell side, what the institutions are doing. It kind of gives that little footprint. Okay, I'm going to get in the final thing I'm going to finish off on this class, and I appreciate you guys hanging in there with me, is I'm going to go over my index plays. But the way I trade my index, and I typically trade the SPY, the way I trade my index is by buying options, right? So the SPY is trading for $370, a share. You can get better returns and better alpha trading the options on the SPY or the SPX, which I'll talk about in an advanced class. So I want to do a quick options review for those of you still not clear on what an option is. And I promise you, we're going to do a breakout class on an advanced options course. Okay, so there's two types of options. Okay, there's calls and puts. And really, a call, let's go over a call option. Okay, a call option is nothing more than an agreement between two parties. Okay, so you have a buyer and you have a seller. Okay, let's say that you're the buyer and I'm the seller. And let's say that you feel, that's right, I'm talking to you, you feel Apple's going up. Okay, but you're like, I don't want to buy Apple stock right now because it's a little too much a share for me. And I'm not quite sure. So I want to lower my risk a little bit. So, you think Apple's going up. I, on the other hand, I'm not so sure Apple's going up. I think it's going down. Okay? So you come to me and you say, Mike, hey, listen, how about we create a contract? Okay? I'll pay you a money. I'll pay you $200, $300. Okay, if for the next 30 days you agree to sell me Apple at a set price, let's say $100 a share. Okay, so I'm sitting here thinking, okay, geez, this is like a sucker bet. You're telling me that for the next 30 days, I have an obligation to sell you 100 shares of Apple, right, at $100, and you're going to give me $300 for doing that when I think Apple's going to 80. Done. Okay? That's essentially what's going on. So you, the buyer, okay, you think it's going up, you're bullish, so you're willing to pay a premium, so you'd rather pay $300 versus the $10,000 it's going to cost to buy the freaking stock, right? And me, look, I think it's going down, so I don't mind taking on that obligation. It's only for 30 days, okay? And again, it could be, the expiration could be longer. I'm just using that as an example. So you, the seller, you're receiving a premium, but you have an obligation. You, the buyer, you have this right. So you're locking in a buy price. Now, you may say, Mike, yeah, but what happens if you don't own Apple? Well, obviously, if I don't own Apple and Apple goes up, I'm going to have to go in the marketplace and buy it so I can give you those freaking shares at 100. So if Apple goes to 200, I'm going to have to go buy those 100 shares at 200 and sell them to you at 100. Now it's not such a sucker bet anymore, is it? So that's what you, the buyer, are hoping, right? And the seller, it's like, so you're taking some risk there. Okay, you're taking some risk and really taking unlimited risk because Apple could go to 1,000. So you got to be careful. But, when you talk about options, and that's where the VIX comes in and the premium and all that stuff, and I want to get into that here, okay? But, the house, the sellers are the house typically, okay? So you got to be careful about this. But when you're trading just on a short-term day trading basis, you take all that out of the mix. So let's go over an actual example. Okay, let's go back to the same example. You are bullish Apple. You're bullish Apple. It's currently trading at 100, and you think it's going to 120 in the next month. Well, there's two ways you can do this. You can go and buy 100 shares of Apple at $100 a share. It's going to cost you $10,000. Now, if Apple goes to the 120 that you think it's going to go to, okay, you then sell your 100 shares and you bring in 12,000 and you profited 2,000. You made 20% of your money. Great trade. 20% a month. Great trade. That's what you're saying to yourself, right? But what was your risk? Well, your risk was if you were dead set on Apple going to 120 and didn't even look at it, your risk, it could have went to zero. So you could have lost all $10,000, right? Okay, so what's the other option? If you want, instead of buying the shares of Apple, what happens if you buy a call option? What's the end result? Here's what happens. If you buy one Apple December 100 calls, which means at 3, what that means is every options contract is a 1 round lot. How much is a round lot? 100 shares. Which means, if you ever heard odd lot, it means you're buying something less than 100, okay? You really don't hear those terms anymore, but that's where it all came from, okay? So 100 shares is typically the minimum an investor will buy, because it used to be the minimum that a broker would accept from an order. That's where they got that from. Now it's different and online and all this other stuff, and it's completely different now. But still, options contracts, one option contract controls 100 shares of the stock. So if you buy one Apple December 100 call, what that says is that you have the right to buy 100 shares of Apple at 100, okay, till the end of December. How much did you pay for that right? You paid $3. Okay, so here you go, one contract at $3. But remember what I said, everything's in hundreds. Okay, so one contract at 3 is $3 per share. So there's 100 shares you control, so it's going to cost you 300. So what you got to do, you always got to multiply by 100 the premium. So if you see a premium of 3, then you're paying 3. So you're paying $300 to control 100 shares of Apple, where before an option in scenario number 1, you would have had to put $10,000 up to control 100 shares. But now you're probably saying, yeah, but Mike, I still eventually have to buy the shares and put my $10,000. Now I'm putting more up. Not true. Because think about it. What happens if Apple goes to 120 before expiration at the end of December? Well, those options is worth something, right? You pay, you have a locked in $100 premium, you locked in $100 buy price. So there's a secondary market for options just like there are stocks. So what do you think's going to happen when Apple goes to 120? Well, now you're how much in the money? $20 a share. So your premium on the option will be worth at least $20. More than likely, 99% chance, way more. Okay? So if you go in the secondary market and you sell your contract, your one contract at 20, remember that's not $20, it's $20 a share times 100 because it's in hundreds. You now get how much in return? $2,000. Okay? But you only put up how much? 300. So what's your return now? Not 20%, but 667%. And what was your risk? $300. Not bad, huh? That's why investors, especially small investors, have gravitated towards options in record numbers. Okay? But there is, the majority of the casino's considered the seller, not the buyer, and they win the majority of the time. There's a reason for that. Okay, so there's a reason. So don't get too excited, because technically, if you're willing to risk $10,000, right, you could have went and bought. Well, geez, you could have bought. You could have bought tons more. You could have bought maybe 10 more. If you would have bought 10 more contracts, it would have been 3,000, and you would have made 20,000. So if you're really bullish on Apple, you could have made a boatload of money and still risked less, 30% of what you would have risked making the 2,000. So, if you're using options short term, love it. Okay, you don't have to worry about VIX and stuff like that. You do in a way, but if you're getting in and out day trading, and the spread and the options are very liquid and the spread's very small, and they're heavily traded, this is a great option to trade instead of the stock. You can really push your option, your money, your returns up. Now let's look at what a put option is. A put option is the same thing, except it's on the reverse. It's agreement between two parties, but now the difference is you're locking in a sell price, not a buy price. So if you, let's say we reverse, and I say, well, wait a minute. I'll tell you what. I think Apple's going down, but I don't want to take on the obligation. So I say to you, you think Apple's going up? Okay. I'll pay you a premium to lock in a sell price for that 30 days or whatever that period of time is. So you're saying a sell price at $100, huh? Okay. So what does that mean you have an obligation to do? This is where people kind of get confused, right? Because you got to think the reverse. Well, you have an obligation now to buy 100 shares, okay, at the buy price, okay, within the expiration. So you have an obligation, you received the premium, so you have an obligation to buy those 100 shares. I'm locking in a sell price, okay? But the sell price is 100. So if the stock, if the stock goes, think about where it goes, right? So you can really make some money in the puts. Now let's use an example. If you're a bearish Tesla, okay, let's say you're bearish Tesla at $400, right? And you think it's going to 320 in the next month. You have two ways to make money. Okay, Tesla, $400, that's a lot of money to put out of your pocket. So the way you could do that is you would short 100 shares of Tesla at 400. Okay, it's going to bring in 400. It's going to bring in 40,000 into your account, but you owe those 100 shares of Tesla. That's your basis, and the margin account's going to require you to have some portion of that in there, and they're going to charge you margin interest. Okay, now if Tesla goes to 320, you have to go and buy those shares back, because you got to get the shares back. You borrowed the shares and you sold them. Okay, so you buy 100 shares at 320, it costs you 32,000, but you had 40 sitting in there, so you get to keep how much? The 8,000 that's still sitting in there. So how much did you make? 20%. Okay, minus any interest cost. But what was your risk when you short? Your risk is temporary, is actually unlimited. What if Tesla goes to 10,000? 5,000. Who knows where Tesla can go, right? So theoretically, you could have an unlimited risk. So pretty risky to short, okay? So what's your other option then? You don't want to take that risk and you don't want to go short, it's complicated, blah, blah, blah. What's your other option? Well, you could buy one Tesla December 400 put option. What does that say? What are you buying? Well, it says that you have the right, okay? You have the right to sell Tesla at 400, okay? Anytime in December, and the cost is $5 a share, or And actually, that's supposed to be 9. I apologize. We made a mistake in this slide. It's supposed to be $9 a share. So the premium is $9 a share. So one contract at 9 is $900. That's your cost. And you may say, Mike, why is the premium so much for Tesla than it was for Apple? Apple, when it was, Tesla's trading at 400. My strike price is 400. Apple was trading at 100. Strike price is 100. Why was I paying 3? And now I'm paying 9. Okay, well, the reason is because it's called implied volatility. Volatility is in there. Tesla moves a lot more, and it's a lot more whippier. So the odds are that you could get in the money a lot quicker, possibly, or you can go out of the money a lot quicker. Okay, so what happens? If Tesla goes to 320, what do you think is going to be that option is going to be worth? Well, you're locked in on your option a sell price of 400, right? So if you're locking in a sell price of 400, what's that option going to? What's that worth? $80, right? So now it's worth $80, but you got to multiply that times 100. That's 8,000. Well, that 8,000, how much did you risk? $900. That's what the option cost. You made an 888% return. And if you were willing to put $40,000 into Tesla, you could buy. What if you bought 3 contracts at $2,700 and made $24,000? Not a bad return, right? And again, you can still, just like a stock, cut your risk and don't have to lose all the premium. You can always sell them at a discount and still get some of your money back. So that's the whole theory behind options, and I brought this up because I wanted to go over it again before I get into the SPY trades. And this is where we're going to end up, and I promise we're going to end in about 5 minutes here. So SPY trades. Other indicators I use, the whole moving average with a setting of 50 in there. It reduces lag, increases responsiveness, eliminates noise. I use the RSI. These are just to help confirmation and with entries. Okay, so just you might see. So let's look at some SPY setups. Okay, here you can kind of see the SPY daily chart. Okay, and you can see the SPY daily chart with a really important level down here. Now, really, if you look here at this level, okay, this is a nice little level here. It goes back, way back here, provides support here, provide a little resistance here, provided some support here, right? Almost the scene of the crime right here from this gap fill, provided some support in here. Nice, strong level. So the day before this, we were in a nice long down bar. And what we had was a nice little reversal. So we broke the low the prior day, and we closed above it. It's kind of at a key support level. This is a key reversal play. Key reversal play. Okay. Now, if you look at the hourly chart, you can see where we're here, and we're kind of bouncing off that level. We bounced off that level. We were oversold going into here, so we have worked off that oversoldness. And let's see how this play worked out. Well, if you look here, now we got a bunch of things on this chart. I kind of want to go through them. We got the prior week's low, talked about that. We have the prior day's high. We have the pre-market high, and we have our 15-minute high and low. And here you can see the Holland cash. Okay, and then down here we have the prior day's point of control. Okay, first time I kind of brought that up. So this trade will show you a lot of stuff in one trade, and it's going to blow your freaking mind. Okay, now, so what did we do? Well, if you look here, we stayed out of this choppiness. So you had the Holland cash, it was kind of, flirting around, made this 15-minute low. We drove up, right? Kind of turned green, made a 15-minute high, came back down. We're kind of chopping in here, right? And, we're above that level that I was talking about on the daily chart. If we go back on that level, that 319.80 level, right? So we're well above that, so we're feeling pretty good. Above the point of control here. Now, what happens is we take a little dip down and we dip through the low. Looked like this was going to be a short. Holland cash turned red. We were getting ready to short this right here because it looked like it was going to be a failure. But what do you get right away? It didn't give us much time, thank God, because we probably would have got in, got whipped out, and then got back in again. But it kind of broke the point of control. Bears were in control for a little bit, but it really, if you look here, never closed below here. So it didn't whip us out, didn't close below. They took it right back to the opening print. And once we got here with all these levels here, and once they test this level, they got the amateurs out. Okay, so now the Hull and Cash turned green, and I call it the Hull and Cash. Sorry, because it works really well in some of the ways we use this. And so we bought here, and then when we broke the 15-minute high and consolidated in here, we bought another position. And what did we buy? We bought options. We didn't buy the stock, right? We bought the options. So it kind of hung around here, and then we exploded out, and then we got out. Once this turned red, we're looking for this pre-market high. We got out a little bit of the contracts here. We got in here, held, and then we didn't violate this low, and then we held, and we're really determined to hold to this prior day's high. We took some of this, and then once it was still green breaking through here, we got out of the rest of our options up here pretty nicely. Now, there was another portion of this trade that kind of helped us buy in here. Okay, that kind of helped us actually add to our position throughout here. And I want to show this. It was a relationship to a market leader. And I went over this in one of our classes and one of our shows, actually. And a lot of traders, I got a lot of feedback from it. And traders said this, a lot of traders have messaged me and said, Mike, this has changed their trading dramatically. So what I do is I have the leaders. I talked about the generals, the leaders and the generals. Apple's a general for me. I like Apple as a general because it led us out. One of the stocks leading us out. It's heavy institutional ownership, right? So, it's not going to get whipped around by traders and stuff like that. It's a good leader, okay? And right here, this is the Apple chart for the same day the SPY was trading. Overlaid this chart. You can do this in Thinkorswim. Overlaid over top of this chart is the SPY. Okay, well, if you look here, Apple is making higher lows, okay, but the SPY came down right here and was making a lower low, okay. So the leader was telling us, nope, we're coming back out of this. We're nowhere near. Look, Apple's nowhere near down making new lows. So this was enough of a divergence that immediately it caused us, at that little circle I showed you, immediately caused us to really go heavy on our size than we normally would have had. And it was great because this particular trade was a huge trade. I'm not sure if we put the actual trades in here. I'm going to look. But I think it was a 125% trade, just on the options. And then having this additional confirmation was incredible. And then also, if you look here, it was kind of diverging here, and we took a short in on the SPY because the SPY was kind of making new highs and stuff. We took a short, and it worked really well as well. But I don't have that trade covered in here. Now, what indicators did I use? They always like to call it, on the show, and I haven't showed it a lot lately because we've been kind of busy, but with these classes and stuff. But I always like to bring up, they always make fun of it, they call it my NASA terminal, okay? These are my indicators that I have that I'm using all on one little page, all one quad to show, what's going on to get some information, okay? I got my tick up here. I got my cumulative tick down here. I got my ADD here. I got my trend here. I got my VIX here. I got the Qs over here because I'm always trading the Qs, which has my RVOL. It has my VWAP indicator. I got my leader, my market general Apple, and I have my sentiment leader, which is Tesla. All right here, one spot. So when I'm making my trade, I can make informed decisions. Okay, and there were several things that helped out that made this trade just an A+ trade. One is you saw VIX was declining. VIX was in a declining situation channel all the way down through the whole day. Gave us confidence to hold, right? You had the tick. Look at this. The tick really, uptrending. and spending a lot of time here in the positive overbought area. That's good for us. Why? Because this is the low, this is the afternoon hours. So when the stock was kind of filtering down, no, there was still a positive tick going, which let us hold till we got to this extreme area, which produced massive alpha. And then another divergence with the Apple divergence was the ADD, shooting up, going above the zero line. Okay, with higher lows. So this is how we use this, right, to look at trades and give us really high, low risk setups. Okay, trading options. And again, we made 125%, or I believe it was 125, 119% on that trade, extra heavy on that trade with lower risk. Beautiful trade. Okay, let me go over another one. Here, and you can kind of see that was the bar that we had on that day from this nice little reversal candle. Okay, so you got to recognize your patterns. Well, here's another one, another reversal. We didn't come down. So what I liked about this candle, even though it was red, was that it didn't come down. It made a higher low. Right? And I like that. So we kind of got like a little trend line going here. And it stayed away from the 200. We had so many market professionals at the time. Oh, it's going to hit the 200, 200, 200, 200, 200, 200. Weren't worried about that. So it didn't hit the 200. Next day was a doji day, right at an important level with moving averages up above. Okay, so let's look at the hourly chart. And again, the hourly chart, you can see this level here, but nice little rounding action. But we're going to need something to really get above that level. Well, what we got was a gift in the pre-market. We gapped above it. And I told you, I love when we gap above these important market levels. I mean, look where it held here, right, as support. So it's going to be strong resistance. And what level is that? That level is an important level. It's what I call the scene of the crime. This is the scene of the crime of COVID. This is where we began our descent. Okay, it's the first gap we had. It's where we began our descent. It's the scene of the crime. It's an important level. It's where we topped out right in here, right? It's we got some important levels through here. So important levels to look at. And then if you look at this level in you look at this level in here, some nice levels. So you got that sitting above. You got this level sitting here, and you can see scene of the crime, support, resistance, chopping around, and now, we're gapping above, so we don't have to deal with that level. I love that. So let's look at the daily chart. What do we get? A lot easier trade, no whippiness. We gap down. Are you noticing a common pattern, by the way? I hope you are, because that's what you got to notice. You got to burn these patterns into your head. Use this opening print because it's a professional level. It's a professional indicator. It gives you an edge immediately. Okay, we don't have many people looking at these. We don't have a big following, because this is not what we're doing. We're not looking to sell a product or anything like that. Like, we're not going to come at the end and say, oh, by the way, great, now we're going to sell you mentorship, or we're going to sell you something else. We're not looking to sell anything, right? So we're just telling it the way it is, and so we're not in that whole game. So enjoy it, man. Enjoy it, and use this opening print. And you can see right in here, as it was consolidating, we took it. I took, me being a risk taker, took the anticipation trade, and it paid off. I added up in here. Luckily we blew right through the pre-market high. We blew through the weekly high, and we just kept on going up. And then we got out. When you go this far, this fast, we got out up here. And it was a nice trade. It was a quick trade. It was a 15-minute trade, and we made like 65%. Okay, it's not hard, guys. And you can see what we were looking at. Explosion out of the ADD. So this gave confirmation, right? Kind of dropping back. You have VIX here, which also showed that VIX started to VIX was in a nice downtrend, and then we saw that this game was kind of over a little bit. We saw that Apple was very positive. The leader was leading us out. The sentiment guy was, Tesla was good. So very positive trade. Okay, very positive trade. So, look, guys, it doesn't take much, man. It's not that complicated. It's doing it repetition over and over again, trading, not paper trading, okay? Trading with real money, to trade with the emotion that you get, okay? But remember, I got to be careful, because when I say no paper trading, somebody might maybe didn't listen to the other classes or something. When I say no paper trading, I'm not a fan of paper trading, okay? Yeah, I'm a fan of paper trading when you're trying to trade different strategies and learn your strengths, but paper trading does not equate to real trading. The reason is because there's no emotion attached to it. You can trade on paper all day long and then go live and lose. So we don't have any of our traders trade paper. Okay, what they trade is they trade real money, but small size. Okay, so they got money on that line, so they can understand how their emotions are, right? But trading doesn't need to be complicated, guys. You could trade this SPY strategy, trade it once a week, twice a week. You can make, you can make yourself, $5,000 a week, right? $5,000 a week is nothing. Trading 2 times a week, having the rest of the week off, right? Compared to what people do, working their jobs, stuff like that, just trading one security. You don't have to trade all these securities and have, learn all these strategies and stuff like that. You can do that if you get good. You got to become a master of one, not, Bruce Lee. I go back to the Bruce Lee quote all the time. I fear the man that has done one kick 10,000 times rather than the man that's done 10,000 kicks one time. I'll leave you with that. Good trading. We're going into next week, our final week. It's going to be a good week because we're really going to, wrap some things up. We're going to get into, set up schedules, stuff like that. And then we're going to get into our free mentorship program. And we're going to start trading live so you guys can see us trade live, trade setups live, and see some of these trades. Okay, sorry, I know this is probably a 3-hour class, but geez, man, we had so much to pack in and we had to finish it this week. So it's the weekend. Make sure, take time, take a break, and just go through and do this class because it's important. You want to recognize these patterns because you don't know where that one little gem is that you're going to pick up that's going to make a difference in your trading. Safe trading, guys. Talk to you later.